of America, and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
We will now call the June 6, 2019 meeting to order. Roll call shows everyone here except the attorney. Are there any agenda changes? If not, we will go to the consent agenda. We have the May 16th, 2019 regular board meeting minutes, April 30th, 2019 committee of the whole minutes, May 7th, 2019 committee of the whole minutes, licenses and permits as presented in this packet. We have renewal operator licenses, 2019-2020 renewal liquor licenses, combination Class A and Class A fermented malt and beverage and liquor licenses, combination Class B and Class B fermented malt and beverage liquor licenses, 2019-2020 Class A liquor license, temporary Class B retailer's license, and then we also have presentation of accounts and other claims against the village, and the voucher list is in the packet. And there is, on the voucher list on page 2, Jane noted there was a name missing on the second line, and it should be Chris Keppel. Are there any questions?
I will make a motion to approve.
Second.
Roll call. Dan?
Aye.
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 I was not in attendance on May 16th, so would you like me to abstain?
If you wish.
Okay.
Aye.
Motion carried. Pre-registered citizens to be heard. Under committee reports, there are none. Number 7, unfinished business from previous meetings, there is none. 8A, new business, Kerber Rose financial report.
Hello. If you don't mind, I'm just gonna use this little corner of the table. My name is Christina Dahmer. I'm a CPA. I'm a senior manager at Kerber Rose. I started working with them about 9 months ago. Jacqueline Nielsen was the manager on the audit, but she couldn't make it to the board presentation. So I am going to present the audit to you today. I will be starting with the big book that you got, the big red book as I like to call it. And if you would turn your attention to page 1, which is the first page of the independent auditor's report. This is our claim to fame out of all these pages. It's really the only item that we are responsible for preparing. The rest is the responsibility of the village. However, we do assist the village with presenting and preparing the financial statements. So the independent auditor's report basically tells you whether or not we have found that the financial statements are presented fairly in accordance with generally accepted accounting principles. Those are promulgated by the Governmental Accounting Standards Board, so they're the ones that give us the rules to follow in order to present fairly your financial statements. You'll see we have a couple of special opinion paragraphs in your financial statements, and I wouldn't get too hung up about those. It really is just related to that discretely presented component unit, your fire district. If you look at the financial statements, which begin on pages 4 through 7, that is the government-wide presentation. That's the entire village on an accrual basis, reporting everything under the sun that you own and everything that you owe. And we had determined that the fire district does not have the appropriate information necessary in order for us to record their fixed assets. their land, their capital assets such as equipment, etc., and they're not depreciating them. And that is why we have those two paragraphs that say that there is an adverse opinion for the discretely presented component unit, and then it further clarifies that adverse opinion. Okay, so on page 1, you'll see we have a basis for adverse opinion on the discretely presented component unit. And it's just related to the fact that they don't have all of the fixed asset information, and they're not depreciating those fixed assets for the purpose of presenting the financial statements. So I wanted to point that out up front, because I know when we see words like adverse, it sounds like something is really wrong, and everything on the village's side was presented fairly in accordance with generally accepted accounting principles. Okay, so you'll see we do have a following paragraph on page 2 that's an unmodified opinion for the village's financial statements themselves. The other highlight in the auditor's opinion this year is that we did have new standards that came out from the Governmental Accounting Standards Board to recognize other post-employment benefits. And the village participates with the Wisconsin retirement system to provide health or life insurance benefits, which is administered by ETF through the Wisconsin retirement system. The payments are made to a company called Securian, and they administer that plan. So there were new requirements that we had to implement that basically put an additional long-term liability onto your balance sheet. And that's what that's highlighting there. I'll walk through those things as we look at the actual numbers, but I wanted to highlight those items because they are somewhat different from the typical auditor's opinion that you might see out there. Okay. The following pieces of the auditor's opinion just describes our relationship to the rest of the financial statements and what our procedures are for those. Okay. So an audit is basically us coming out a couple times throughout the year. We will do preliminary field work, then we'll come and do final field work. And preliminary field work will entail us finding out about the village, what the processes are, how those changed, because as there's different folks that come and work at the village, those processes are going to change from year to year. We take that information and then we do substantive testing based on our risk assessment coming from what areas we think we need to look into to actually test various items, okay? And that's what we do during final field work. The results are fully adjusted trial balances, which then we compile into the financial statement numbers themselves. So then those numbers begin on page 4. And as I mentioned, this is the beginning of your government-wide presentation. So the way that governmental financial statements work, they're a little bit different than you would see in the private sector for a company, where it's a lot less pages. And that's because governments are run by their budgets. So we really focus on budgeting in government. And therefore, the funds that we report are reported on a very close to cash basis called the modified accrual basis. And then we're required to take that information and add in everything which is on an accrual basis, meaning all of the fixed assets, like the beautiful building we're in right now, your land, your equipment, etc. We have to add all of the liabilities that you owe to either bondholders or to pensioners that you will have to pay for in the future. And that is what's presented in the beginning. So this gives you your equity view. I always say that the funds are presented like checkbooks, so it's very close to cash, and then your government-wide presentation is like your equity. So it would include your mortgage and your house, for example. So you're going to see everything, including your cash, in addition to that, those assets and liabilities that are long-term in nature. So this presentation allows you to see the big picture, and following this presentation, you can see the liquid resources that you have to work with over time, okay? So the biggest changes that happened to you guys this year is that you're lucky enough to live in Wisconsin, first of all. I used to live in Illinois, and you have a very good pension system here. It's a cost-sharing, multiple employer pension plan. It's very well funded. So last year, there was actually a net pension liability, which just means that those assets that they set aside to fund the long-term liability for everyone in the pension plan were a little bit less than what that long-term liability was. This year, it actually flip-flopped to a net pension asset. So that was a change to your balance sheet because last year there was a liability reported and this year it's an asset. So you'll see it up top, it's called a net pension asset. In any given year, that's going to fluctuate because the calculation of that is actually based on an actuarial valuation that's calculated by an actuarial firm for the whole plan, and then they separate it out for everybody that participates in that. So you're actually in a really great place because I tell you, an entity of this size in Illinois, you'd be seeing negative net position. Their equity is negative because they owe more than they actually have in cash and assets. And that's mainly because of their pensions being severely underfunded in Illinois. In Wisconsin, we don't have to worry about that at this point in time because the Wisconsin retirement system is pretty well funded, okay? So your equity for your governmental activities, this includes anything that's financed by general government revenues, such as property taxes, grants that you get, etc. And on the following page, you'll see the different types of functions that fall under governmental activities. General government, public safety, public works, culture and rec, health and human services, conservation and development. Those are all funded by general revenues like your property taxes, intergovernmental revenues that you might get from the state or maybe even federal sources, and then things like investment income and miscellaneous income. Some of those revenues on pages 6 to 7 are actually presented as program revenues. So this is a very unique presentation on pages 6 to 7 versus what you would see for a company because it's going to show expenses first, as you can see on the left-hand side, then followed by the revenues. And the reason for that is because it allows you to get a look on the right-hand side here for how you're doing in those activities, covering yourself, covering those expenses for each function with specific revenues that you're collecting for those functions. So the fact that you have negative numbers for the governmental activities, that's to be expected because a lot of those expenses are actually financed by your property tax revenues and general types of grants, okay? In the program revenue columns, you will see charges for services. So when you charge someone for a liquor license, for example, it would go directly there under general government instead of in the general revenue area. So this gives you an idea of how much of those expenses you're covering with your property taxes. For your business type activities, that's your water and wastewater utility. So you want that number on the right-hand side here, which is 272,000, to be a positive number. That means you're covering your expenses with the specific revenues that you have for operating purposes. Okay?
I have a quick question on page 5, just so that I can understand.
Absolutely.
You had given like an adverse statement, and I just want to understand, because we just did this past year, didn't we do like was it an appraisal of all of the fire district? Wouldn't we add that as an asset, or at least partially owned asset, now that we actually have the inventory and we have
That
the,
information was all available, so I don't
So-
know why it wasn't grabbed.
okay, because we could
So we
depreciate.
do have that reported, but it's not being depreciated.
Okay, so it's just that the adverse statement is
It's
because it's
because
not
it's
being
not.
depreciated.
Mhm.
Why wouldn't we depreciate?
So we could do that, and I don't know what kind of discussions were had at the time. You know, because of the timeline of when the information was received perhaps, or, you know, we would offer the service of doing that for you, but there could be additional information that we might not have access to, and I just don't know the specifics since I wasn't there.
I'm just looking at the
those
long
months.
term for the
Sure.
depreciation and value
Yeah,
versus.
and fire information was presented
Yeah.
at the appropriate time before auditors even started. So-
Yeah, and
I
I'm not
reviewed
saying it wasn't, I'm just
No,
saying,
I
I
mean,
just
I-
couldn't understand what that was and why we're not depreciating
Yeah,
it. So-
I reviewed it prior to the auditors, and it was in my office, so I'm not sure what the
So-
missing component is here.
We are reporting fixed assets, so you can see there's $1.1 million, and I'm sure we got that from the appraisal,
Mhm.
but we don't have any
Depreciation
information
schedule.
on depreciation. Those need to then be segregated into the various types of assets, like equipment. Right now, it's just on one line, just everything.
Do we depreciate public works?
Yeah,
Okay.
the numbers she needs, we're not getting from the fire department.
Oh, and it's not that they're withholding it, it's just maybe they don't realize that we need,
You need purchase dates,
yeah. The
life
depreciation
expectancies.
schedule for the long
Yeah.
term would be better for this financial report.
Just having the final numbers does them no good. So
Okay.
we need data all the purchases, the
Okay.
history, you know, when there was bought,
The historical data
values,
is what's
Yeah.
difficult.
what the expected depreciation is. Yeah, so we need more data from the fire department besides just a total number.
Okay, it's just,
Yeah.
all right, it was just a
Oh,
curiosity.
absolutely, and I mean, if we had workable data, I'm sure we would follow up and help you get there. But if the historical data is just not there, it can be really difficult. And you could try to prepare something and start depreciating, but the fact of the matter is, if you don't have documentation to say where that all came from,
Yeah.
we still have to give you an adverse opinion.
Yeah,
So is it worth going through
I know.
that extra trouble, you know, to still end up in the same spot?
okay.
That's sort of, I think, the difference and the rock and the hard
I
place.
just knew it was always an advantage for us to depreciate the machinery and,
Well, I do all the asset depreciation and additions for the village.
yeah,
We don't get anything like that from the fire department.
okay, and maybe that's something we look into in the future, I just,
We can pick it up next year.
yeah,
Yeah, and the fact of the matter is, if depreciation is important for your enterprise funds, for your water and wastewater utility, the PSC requires specialized depreciation so that they can calculate a correct rate of return.
mhm,
But when it comes to governmental type activities that you're providing services to citizens with that are funded primarily by tax revenues, it's really not the most useful information. For the fire district, if they were to try to obtain loans, it would be useful for them. But from the village's standpoint, it really doesn't hold you back, because even if you talk to someone that's a financial advisor, they're gonna understand that this is separate from you.
Yeah.
So they're not going to take this adverse opinion in a bad light because it's not connected directly to the village's.
I was thinking more in
numbers.
the lines of a future loan, if we ever needed to
Right.
take out a loan, I know that we always had to provide the depreciation schedule, and I know that that could help obtain,
For the fire district,
Yeah.
it would,
Yeah.
absolutely.
okay, it's just helpful
Yeah.
information, thank you.
Yeah, sure. Any other questions from anyone at that point? No? Okay. So followed by that government-wide presentation are the individual governmental funds, which begin on page 8. So again, this is like checkbook accounting, which is the easiest way to understand it. It's very close to cash basis. There's just various nuances in the accounting standards that, trust me, you don't want to hear me rattle off. So on pages 8 to 9, you see what ends up as fund balance. That's a very liquid presentation, and then it's segregated into non-spendable, restricted, committed, assigned, and unassigned. So that communicates to you how much in these funds you have to work with. Non-spendable amounts are things like related to prepaid items, because you've already paid that, so that gets recognized as an asset. It's rolling into fund balance, but it's not actually something you could spend down. Restricted amounts, you may have received or have to set aside resources, like what we have for debt service. That entire amount is restricted for debt service expenditures in the future. Amounts that are assigned relate to amounts that the board or management have decided to set aside for specific purposes. And there's a breakdown of those amounts in the notes to the financial statements as well. So a lot of the numbers are aggregated in the front, and then there's detail in the back to show you what those detailed items are. So the assigned fund balances are on page I'll find it. On page 39. So you can see on 38, we start with non-spendable, restricted, committed, and then it goes down into the assigned fund balances. So within the general fund,
Can I bump in here? Everybody needs to hear here, there's a big difference between committed and assigned. Okay, so on these assigned funds, those are funds that are established, but they're not earmarked, they are not controlled by an ordinance. So when you see that balance of $538,889, that is actual money that is in funds, earmarked, but not committed. So what you need to see is if you add the 538 and the 434 directly below it, that is real cash that could be used for projects, as long as we know that that money can get back to those funds
absolutely.
in an ample amount of time. So that's where I'm gonna be coming to you in the near future with Carl as we're working on budgeting and capital projects to use these funds temporarily to do projects and have it reestablished before we get back into an audit or a budgeting cycle. So this is where we're looking to possibly use nearly $1 million of funds rather than borrowing consistently like has been done in the past.
So we've got like $500,000 more net, I have last year's side by side.
Correct.
So looking at this, our total net position is about $500,000 more than it was
Correct.
last year, and that was one of our
Correct.
goals, if I remember right.
Correct.
And moving some things, right,
Correct.
is what enabled that.
And Jane's also gonna give you a very good update later on in this meeting. The other thing that we need to tell you is we're in a position that we could possibly kill some very big outstanding debt yet this year, moving into the 2020 budgeting cycle, and make up some serious interest dollars. So that's something we're gonna take a hard look at here, so.
Yeah.
But again, here's where it's at. We've committed that $538,000 to funds. And in doing a deep dive with Jane, a lot of that money's never moved. It's sitting there. And we're borrowing for things that it doesn't need to sit there for. We can allocate that to other projects in short term. So that's something we need to keep in mind, okay?
Absolutely.
Sorry to interrupt you.
No, that was the best interruption I could have ever had. That's exactly where I was going with it. Those amounts are just assigned, so you can certainly free them up. And those assignments could have been made by previous clerk treasurer, by previous board members, you know, so if they've been hanging around for a while, you do have control over that.
Correct.
So, anything that's committed, like what we have for the TID number 3, that was a board decision to commit those amounts, okay? And that's because you created TID number 3.
Yeah.
But that money isn't technically sitting in an account for a TID.
So the way it works is there's normally just a few checking accounts and most of them are pooled amongst the funds. So this is an arbitrary separation from those checking accounts. Fund accounting actually started by having separate checking accounts, but now that we have sophisticated accounting systems, we no longer have to have separate checking accounts for each fund. So sometimes there are separate checking accounts and we would recommend it, like with CDBG loans, that type of thing. Sometimes for the TIDs, you might want to set up a separate account so that you can track it all separately. But other than that, a lot of the funds just are pooled.
Okay.
Primarily, we have 2 majors, and then probably, what, a dozen secondaries? Do we have that many?
I don't think that many.
Okay, but it used to go at 50.
Yeah.
I
Well,
thought you
last
called
year-
it down to like 6.
Okay,
No, there's.
Well, last year we called a bunch out, I think.
yeah, it was last year. But when I first started in September, there was an astronomical amount of checkbooks, physical checkbooks. Whereas these were all, just like you said, put into a fund. Now, what Jane has done is work with the BMO Harris people. Again, I don't want to steal her thunder, it's in her report a little bit later. What she's done is move those funds, and you're gonna hear some good news here in a little bit, so.
There was a file cabinet strictly for all those checkbooks.
And no diss on Lynn, that was her system, that's what she did, so we changed it, we made it appropriate now, so that's her doing, so kudos to Jane over there, that was more her cleanup with Ehlers and David Ferris, so.
That's fantastic. I mean, I like to hear that as an auditor. I know I wasn't specifically on this team, but that's amazing.
It's gonna get better every year, we're gonna
Yeah.
continually improve that process too, so.
Okay. Great. So, yeah, the
Yeah.
actual cash balances are up at the top in the assets. It's the first couple of lines. And there is restricted cash set aside primarily for the taxes that you collect in advance that are to finance next fiscal year, okay? And again, there's detail on the rest of the restricted cash amounts. So for the funds, you can find that on page 32. So those were the early tax collections, so that the collections that you had in December that were to finance this next fiscal year that you're in, okay? So as of December 31st, 2018, that's actually reported as a deferred inflow here because you have taxes receivable plus the restricted cash. add those together, and you're roundabout at the deferred inflow offset, which are the taxes levied for next year. So that's pulled out of your fund balance, so that you're not considering that as spendable resources as of the beginning of the year, because those tax revenues are for the following year. So again, because governments are run by budgets, that's how we manage government. That's why this presentation is a good analysis of what you need versus that government-wide presentation that just shows everything under the sun. It's great for you to see that too, so that you know where you're at as a whole, but this is what is going to be used to manage. The following presentation is on page 10. It reconciles how you get from the checkbook to the government-wide equity, okay? So this is taking your fund balance for all of your governmental funds and taking you to net position for governmental activities, okay? And it just shows all of those differences, like the fixed assets get added in, all of the various things related to your pensions and other post-employment benefits for that life insurance piece gets added in, and then your long-term debt, like your general obligation bonds and sick leave, other types of compensated absences like vacation leave, also get added in to get to your equity. And then following that is your operating statement. So this is what changed during the year in the funds. So you'll see we have a net change in fund balance that takes you from your beginning fund balance down to your ending fund balance. So this shows the net revenues and expenditures, including the transfers between funds that resulted in your ending fund balances and how you got there, okay? So there were some slight decreases in the general fund, in the debt service fund, and in the capital improvements fund, related to additional expenditures reported versus the revenues that were collected in those funds. The TIDs, TID number 2 actually had an increase because you collected some tax revenues in TID number 2 this year that were not offset by any projects that began. And in TID 3, you'll see there was a decrease because there was less revenue collected versus what was transferred out and the expenditures that occurred in that fund. Okay, but as a whole, you had a $55,000 increase in fund balance for all of your governmental funds.
May I take you back, can I interrupt quick? Take you back to page 10.
Okay.
See where it says long-term receivables? Can you break that down for me? Or is there notes in the back that,
Let me see, 224.
what's that comprised of?
Those are loans receivable.
Oh,
It's less than last year. Last year was 245,888.
Loans receivable.
It was less than last year.
Yeah, I'm still looking for clarification now.
yeah,
Whatever it was.
Did you say
Would
it's
that-
less than last year?
It is less than
You would expect it
last
to go
year.
down if you're collecting
yeah,
on those.
I'm more
Um,
concerned what makes that up. Are those facade loans?
Probably this building.
What's receivable?
This is a
These are
long-term
assets.
receivable.
That's a receivable.
Money
Means we
coming in,
bill.
we collect it.
To be WDF.
So normally, because it's just one
So
line
that-
item, we wouldn't.
You wouldn't break it out?
break it out, because it's not
Is that
made up of a lot of different items.
120,000.
For what?
It could be WDF outstanding loans. We may never collect on them.
Oh,
You
you're
know what I'm
kidding.
saying?
WDF.
It was a part of the CBDG grants back in the day, so now it's housing upgrades where we loan money out for interest-free.
And it can be paid back if you ever sold the house.
It
Is that
stays
like
on
the
your
one
note.
improvements for efficiency?
Starting in what, 1992?
Earlier, if you're talking about the village one.
Okay.
The state one, the money we got from the state was 92.
So it has no term to it, with the exception that if the
You were on
property
board
is
when that
sold.
happened? Okay, Jim?
224. Yeah, no,
Yeah.
that's absolutely what it is, because if you look in the back,
Because there's,
They had some funding at that time,
yep, you're tracking that.
Yeah.
And it's
We
20.
have a
less than
WF
last year.
spreadsheet, Nathan, yeah, 'cause we just had an inquiry about it today. There's a potential turnover where it was an $8,000 loan. It's a second on the home that's paid for, but.
Yep, page 55 actually breaks it down into the individual
You
funds.
can graduate.
Yeah, but there's no term to it.
Yeah, we're gonna over here.
Do we
So I
still do
apologize, I
that?
didn't have the context because of being on the team, but on page 55, you'll see loans receivable for housing and neighborhood conservation, and then the Wisconsin Development Fund grant. That's $150,000 worth, and then there is a remaining amount in the general fund as well for $74,000.
Be different if there's a term to it,
Yeah,
but open-ended.
Yeah, I mean, you know,
So
maybe
what,
get the money, maybe you don't.
what are you
There's no
saying?
term to it unless the house is sold, is that correct?
Correct. Correct.
Or
Or they
they can pay
die.
it back
Or
at
they
any
die,
time.
yeah. So anytime you change transfers and title and ownership of a home that's got a lien on it, or you switch ownership status, it has to be repaid.
So we have dockets on these.
Oh, yeah.
Correct?
Yes.
Oh, yeah.
They expire after 10 years.
Yeah. So the money, that's another fund
Pockets
that, so
expire.
if you go to some of that money that I talked about earlier, part of that 500 some odd $1,000, there's better than 100,000 of that sitting in a rehabilitation fund that hasn't been touched in years. You know, we're, instead of taking out loans, we could possibly do short terms to ourselves and use those funds to finance and then replenish that fund before the end of the accounting season, basically.
Do we need the fund?
We don't, but it's like a loan to yourself. It's like a rob Peter to pay Paul fund, which we continually use it.
Self-funding,
Yeah, so,
So listening to these now for a number of years, bottom line, we were always told to get what were we always told to make sure we had? And this year we.
Keep it under wraps.
Yeah, we'll keep it under wraps, but also to make sure that we had that fund balance available. I mean, wasn't there?
Contingency or something?
Yeah.
contingency fund, yeah.
Yeah, the
absolutely.
contingency fund, and is that part of that? Or is that something totally different?
You mean for your debt, or?
I'm just thinking of this is probably my 4th time sitting through one of these.
Well, they always measure you on like a debt ratio,
Uh-huh.
debt to income ratio, or,
Right.
so.
Oh, you're talking about like if you're gonna take out some additional bonds and
Yeah.
they
Yeah.
figure out, yeah. So, I mean, they wanna make sure that you have enough resources to
Yeah.
cover the bills that you have currently. So you have to have enough fund balance.
Liquidity.
A good way to go about that is to develop a minimum fund balance policy that actually shows the financial advisors that you're trying to hit that target. So as a board, you can come up with a policy and say the general target would be, say, 3 months of expenditures would be covered by fund balance.
Okay.
And that would be something that you then either commit or assign in the general fund each year, and that gives you that cushion. They like that because then you've got money in the bank in case something were to go awry, if the economy turned over
You
or
get a better
something like
interest
that.
rate. when
And you would get a better interest rate as a result.
If you do need to take out some kind of debt, you get a better rate,
Correct.
so, okay.
Yeah.
I think we need to review all these funding balances, because I know we created a special events fund with a limit of 10,000. I don't know that it's ever been touched. Nathan?
I don't know.
No? Okay, let's move on.
Okay.
So
Well, I mean,
where-
it's good discussion, it sounds like.
I'm gonna ask you though, where are we currently with our fund balance? I wanna read this correctly, because we have a net change of 55,758.
Correct.
Am I reading it correctly on page 11, the fund balance beginning and ending?
Yes, so those are for all of the different funds. In total for all of them, your ending balance is 2.8 million.
Okay,
But in the general fund, it's 1,071,000.
okay, so, without looking at anything, ladies and gentlemen, we're sitting in very good shape.
Absolutely.
Okay, and the biggest positive that I would say out of all of that is if you look at, in years past, now the past 2 years, we've used fund balance to balance our budget. Whereas in this year, we've seen a $55,000 positive rather than taking from it, we're growing it rather than using it to balance the budget. So if there's positive in that, anything, that's a major stepping stone. So that's getting us out of that where we can start establishing funds to whether it be capital or, different programs that we want to fund. So where in years past, we've been depleting it, now we're growing it back again. So that'll grow exponentially too if we can do away with some debt service, so.
Yes, because as you can see in your debt service fund, your principal and interest is broken down on page 11. So you are paying, this year you paid $168,000 in just interest payments. It's not getting you anywhere. So if you can
That was me hurting.
whittle that down a little bit.
It's less than what we paid last year.
We're a little ray of
$2,000
over there.
By about $2,000.
Keep using your
It should be going down unless you took
Yeah.
out any new debt.
No,
So-
we're not gonna
$2,000
for a long time.
It has
Yeah.
to go down.
Yep.
We've earmarked, Carl and I have, and with the help of Gene, we've earmarked certain things that just are common sense moves that we could kill. That would save us significant amounts of interest. And those are more important before we expend more funds. So that's stuff that we're gonna, as we get into this budgeting cycle, we're gonna put in front of you now. This audit was the major piece that we were waiting to see, because after this now, we're gonna go right back to Dave Ferris with Ehlers and put us on even a smarter path that we're gonna work into the budget here. So obviously with your permission, we're gonna have everything, he's gonna make a proposition to be here in front of you guys, just like she is currently doing a proposal of what we need to do to put ourselves on a smart path moving forward, so.
All great news. Great. Any other questions about the governmental funds this time? The following page then does the same thing that it did before. It takes your net change of fund balance and tells you what was added in and taken out to get your change in that position on the government-wide governmental activities. So followed by that presentation on page 14 is the water and wastewater utility. They're combined. The water is the only piece that is regulated, but you'll see later in the management letter we show you where you're at with both of them as well for your rate of return. So again, you've got a positive net position, your change in net position went up, but since we're on the topic, the management letter does actually go through and show you your rate of return that we calculated for you. It's on page 4 of the management letter. And we show you water and wastewater separately there. That's because we have to separate the pieces of this information out anyway for the PSC report to file that.
I don't have it.
Oh, here's. Do you have another one?
Yes, I do. Sorry about that.
Here you go. And so you can see for water, your rate of return went down a little bit between 2017 and 2018. So it was 6.34 in 2017, it's 5.05. It's still a very healthy rate of return, so it's not concerning, but we just like to help you keep an eye on it so that you can make decisions going forward and decide whether or not you're gonna want to increase rates. Your wastewater went down very slightly, so, you know, not really anything to be concerned about, but it's just something for you to keep an eye on, and we'll continue to calculate this for you so that you can make that comparison, okay?
Is there a significant contributing factor that you've identified at all? Is that something that you saw in the report?
We did also have a management comment following that on water loss, which did increase in 2018. So that likely has a correlation to those decreases in your rate of return, because you're losing some water and you're not able to charge for that. And then obviously that could continue into the future, because as you investigate into what those water losses are coming from, you're gonna have increased expenses as a result to try to figure out where that's coming from. So, I didn't look specifically at where the PSC allows you to be for your rate of return, but that's basically what you want your target to be, so we can follow up on that. Because the PSC does let you, when you file for a rate case and go after however you want your rates to be, they'll tell you the rate of return that you can have, okay? And you can increase your rates up until that.
So Mike, to read this correctly, last year we had, or in 2017, we had a 9% water loss percentage, and we went up to 23% water loss.
That's in accounting.
Okay,
They don't let you deduct water main breaks, that kind of
okay,
stuff.
okay,
So we have accounted water, but they won't let you account for accounted water. The water loss is a little higher. Well, we still have to investigate. We've got people coming in. We had a lot of leaks out there. And we're replacing the older water main as we get money. As far as the rate of return, 5%, PSC is not gonna say anything about 5%. That's almost perfect. They like 6. 6 is ideal, but 5 is still pretty good.
okay.
Yeah,
Is it
so
good?
you're still very healthy, just keep an eye on it so that you don't get far below
Oh, yeah.
the 5%.
What's that?
Does it have anything to do with the trickling?
No, that's accounted for water loss as well. Cold winters, trickling, water main breaks, leaks that you know, that you estimated, still count for water loss because it's not revenue,
Right.
so.
Yeah. That's just a big jump, this time, 9 to 23.
Yeah, the PSC may reach out to us because of the jump, but I don't think it's your fault. But the format this year, you can't
Yeah.
deduct that. I can't knock that 23 down to 14. Because 15 is about the cutoff for unknown water loss.
We were on a trickle, not this past winter, but the winter before, and I wonder if that was like early 2018, and it would be interesting to see if other municipalities had a jump in their water loss.
During what time period?
It was, wasn't
Last
it
year was
early,
so cold.
early 2018, we were on a water trickle,
Okay.
village-wide, correct, Carl? So it
We
would be
typically,
interesting,
that was a bad year,
I
yeah.
was just wondering, maybe other municipalities saw a jump for last year too, it'd be kind of interesting to see, is that?
We have been seeing a jump for last year.
Okay,
For some, not as significant as this one with, with more than doubling, but everyone's in a different boat to begin with, so, but we did see slight increases.
okay. Just a food for thought. Okay, thank you.
I wasn't aware of that, so it's good for me to know too. Okay. Okay, so those are your financial statements for the water and wastewater utility. The biggest piece of that is your rate of return and whether or not you're increasing or decreasing that net position. So you're in healthy shape for your water and wastewater activities. No concerns there. And then on page 18, these are activities that you're holding separate from the village. So there's a library donation fund, and that's set aside because the resources can only be used for the library. It's not used for the village's services. And then the agency fund there is where we separate out the taxes that you collect for the next fiscal year that you collected in advance in December for the county, the school district, and the technical college. Okay. So we separate that out so that in your general fund, you don't see all this cash and think, woo-hoo, you can go on a spending spree. And then on page 19, that's just the operating statement for the library donation fund so that you can see how the balance changed from the prior year to the current year. Following that, as I mentioned, there's a lot more detail on some of those numbers. The first note there in the notes of the financial statements just gives you all of the accounting principles. I gotta tell you, it's really great fun reading when you're trying to go to sleep. Don't worry if you've got insomnia, it'll put you right to bed. But it really details all of the various accounting principles that we use to determine the numbers. Okay. So the good stuff starts in note 2. That goes through your cash and investments. And again, since I'm on the subject, I like to do things together when I'm on the same subject if I can. We do have a management letter comment that's going back several years related to the collateralization of your cash. We just want to make sure that you're aware that your cash is not fully collateralized, but it does look like you've worked with some of the banks already to help with that. What that means is if you've got $2 million hanging out as of December 31st, 2018, and that bank went upside down and couldn't pay that out, you're only insured federally up to $250,000 for each type of account. You get that for a checking account and you get it for a savings account for a government. So you'd be insured up to $500,000 if you had those separated into a checking and savings account. Beyond that, banks are supposed to provide you with collateral. Now, Wisconsin does have a state fund. However, many years ago, they stopped funding it, so there's no telling how many banks they would cover with that money. So as CPAs, we can't say that you're fully collateralized because of that fund, okay? So that's why that big balance is there.
We are. We're covered.
Okay.
We're covered.
You're covered now?
We weren't. We were not covered. We are covered now.
Awesome.
Enough said.
Okay, that's all I need to hear too. Makes me happy.
Yeah. No, that was something that happened primarily after the auditors went through. It was like one of the final cleanups.
Great. So sounds like all the changes are positive. So then on page 30, you know, that uninsured balance is as if we look on one day. That's when we get confirmations. So some people are in a bad position where they're collateralized, you know, a few days before because of those early tax collections. So that's part of it too, because you're getting a lot of money in December for those early tax collections, and you don't send it out until January, February, okay, when you settle up. So that's part of the reason, but additionally, you want to just make sure that even though some of that money is not ultimately yours, you're still covered for all of your balances at the end of the year. So your bank should be working with you, and it sounds like you've been able to figure that out. So on page 31, there's more detail on the interfund activity that happens there. Like I said, the cash accounts are pooled, so there's some year-end cash flow timing there that happens between the funds that are interfund balances, loans between the funds. That doesn't create any fund balance for you as a whole, okay? Because if one fund owes the other, you're gonna see a receivable in one fund and a payable in the other, so it offsets. So when you look at the total fund balance, that's still what you have, okay? So you've got those offsets in there. And then there's various transfers between funds when you move money between funds. Say the general fund pays for part of a capital project, you'd move that into the capital projects fund, for example. So that's the second piece of that. Okay. Then I talked about the and then there's advances. Don't want to skip that. On page 32, there are some long-term advances. Typically, those are to set up the TIDs. So there's money that comes from various funds that help set up those tax increment districts so that they can start to function. And that's what those are. Those are going to be paid back over time. I would suggest that if you don't already have a repayment plan for these, that you strongly consider one. It's not necessary to charge interest to yourself unless you want to, but we recommend that you come up with a repayment plan, because when you don't have one, you know, it's much easier to say, well, I could use the money for this instead, and then it never gets repaid, and those TIDs could end up in a bad position and never repay the village. So that's just something that I like to recommend to folks so that you take a look at that. It's like getting a loan from a friend, right? If you don't actually hold them to it, you never get paid back. So even though it's a loan to yourself, it's a good idea to come up with a repayment schedule and a timeline for those. Capital assets then, because I already talked about those restricted assets for the advanced tax collections and things of that nature. The capital asset schedules are on page 33 and 34. And as I mentioned, for the general government on page 33, nobody really makes any financial decisions based on fixed assets for the governmental activities. So there's not too much to get hung up on there, but it allows you to see what you've got as far as your equipment and things of that nature. And as you see that things are getting to be fully depreciated, that might mean that your assets are older, so you've got to replace those. I don't think you're in that position to see the building that we're standing in now. So the same idea will translate on page 34 to your water and wastewater activities, however. And that's what the PSC looks at as well. As those assets are aging, they get closer to depreciation, you have to start thinking about what you're going to do going forward, because that could significantly affect you if you have to replace a lot of your assets all at once. Okay? But you're really not in a bad position, so that's about that. And then page 35 shows you your long-term debt. So you've got some bonds and notes payable, so I think that's what was being discussed, is that you might be able to get rid of some of those with cash on hand, since you do have significant resources on hand, so that you're not paying as much in interest. The other types of long-term liabilities there are for the net OPEB liability, and that's what I mentioned, that life insurance piece that we had to implement this year. So your piece of that cost sharing plan was $51,000. It's gonna fluctuate every year that we get this number from them, from the actuaries. And it's based on a lot of guesses. That's what actuaries do. They make very educated guesses. So that's really not a huge liability. It's not one that you're necessarily going to pay, because all you do is pay the premiums to Securian for the life insurance. So, you know, it's not like healthcare where that could fluctuate even more. So I really wouldn't be concerned about that. It's just an accounting liability. There's nothing you can fund, nothing you can get rid of, not much control over that. Sick leave and compensated absences, those are the balances your employees have that you would have to pay them if they retire or are terminated. So we like to record that, and we're required to record that so that you see what those balances are, so that you can make decisions based on that, whether or not you want to change that, change your employee policies, or reevaluate that type of thing. These are not really big balances either, but yes, if everyone retired or was gone on the same day, you'd have to pay out.
Can I make a note here too, also page 35, so you see your general decreases, $743,000 in the year, but then I'm offsetting that $168,000 in interest on the bottom, like we said earlier. So if there's I guess a goal that we want to look at, it, if we can reduce the interest of, I mean, 168 is a lot of equipment and projects that we could possibly work with in a year's time.
Absolutely, and you can see the interest for the future on page 37 as well, where there's the debt service requirements to maturity. So you can see all the principal payments that are scheduled to be paid over the next several years, first 5 years, and then in 5-year increments, and then the interest as well. So last year you paid the 168, this year you pay 154 for just the governmental activities, 82 for the business type activities. So definitely could be improved upon if you have cash on hand to pay off some of those. So page 36 is the same presentation, but for the business type activities, your water, wastewater activities. So you've got some bonds there, some notes, and then it looks like all your leases are paid off now, and then that net OPEB liability that's allocated there, okay? And then you can see all of the different issues that you have on page 36. So there's a list of all of the various outstanding debt. So you can make a determination of what to tackle. We also list your interest rates so that you can look at that as well.
General obligation bonds, are those government bonds?
Correct. Yep.
Not personal. Not personal bonds?
I'm not sure what you're
Well,
referencing.
let me say this. I know there's some municipalities that will offer a personal bond,
Mhm.
correct? We don't have any.
Correct.
Okay,
Correct.
that's my question.
Maybe I've never
I
heard
can-
that.
Well,
So
they
the
might-
difference, so the general obligation versus a revenue bond,
Right.
that's usually the difference. General obligation means that you have the full faith and credit of the village behind that. So if you defaulted, they could come after you. You can actually declare bankruptcy as a municipality. So, but a revenue bond, you would issue with the bond being secured by a specific revenue stream. So, you know, you do that in an enterprise fund and finance that with the fees and charges that you're collecting for those services. You do have one revenue bond that's for the water and wastewater activity from 2010, so that's secured by those revenues. So what that means is if they defaulted, you wouldn't have to step up and pay as the village, technically.
Okay.
You probably would want to, because you wouldn't want to go down that path of negativity and affect your bond rating, but you wouldn't legally be required to, since it's secured by the revenues. So
Okay.
personal bond, I'm not sure what
Well,
that would be.
If we would bond potentially a development within the village.
Right.
with cash on hand. So if we would use some of our unassigned or assigned.
Oh, okay, but that wouldn't be debt.
Correct.
That would be okay. That's why I was,
Confused.
yeah. Okay.
Maybe I didn't word it right, I apologize.
No, now I totally understand what you're talking about. And yeah, it's just because I'm talking about debt, so I'm thinking like, how would that be a liability from your standpoint? So I apologize for that. Okay, and then as you can see on page 37, that shows you how healthy you are, even from a debt standpoint. I know you have debt outstanding, but you technically could have $9.9 million of debt outstanding, and you only have $5.3 million of debt outstanding. Plus, you do already have $1.4 million set aside in a debt service fund to pay off the debt. So you could issue an additional $6 million of bonds if you wanted to go on a crazy shopping spree. Obviously, that's not a good idea. So, you know, those legal debt margins are really, really huge. But I have to say that the municipalities in Wisconsin have really done a great job at staying pretty well under those. In Illinois, they're close. And when the market changed and those assessed valuations on the properties really went down, people were in the negative and were over their legal debt margin. And I don't think it's flip-flop still for most school districts in Illinois. So, you know, you're doing great. Just keep that up.
Debt capacity.
Stay under that.
Debt capacity is a major scorecard for municipalities. And
Absolutely.
Portlandville's in a very good shape here. So I've seen them as high as 90%. So.
Yep.
And then you are literally bound, you do nothing for a 10-year period to basically pay debt and try to drop your
Exactly.
payables.
So you can't move forward. You
Yeah.
can't do any
Yep.
projects. You know, your roads just go by the wayside. So, you know, this is.
And how long have we been told we had no money and we were in kind of a bad shape? That's it. Just, no discussion, just.
Okay. Just a
Just
statement.
made a statement.
No worries. Okay. So, then page 38 gives you more detail on the net position and your fund balances, as well as those details on the components of fund balances. Now I said note 1 was really fun reading, but there's even better reading on pages 40 to pretty much almost the end there, page 47. This is all of the special note disclosure that we have to include because you have a pension plan that you participated and that life insurance piece for WRS that you participated in. It's the information that comes from the actuary that's segregated out for you. And those deferred outflows and inflows of resources, they're basically how the educated guesses fluctuate based on what they thought the investments would pan out to be, how long people were supposed to live, and then what actually happened, how much was contributed into the plan, and what was actually contributed. All those differences result in changes to that net pension liability or asset, and for accounting purposes, we defer it over a period of 5 years or the estimated useful life of your employees. And that's something for the plan as a whole. So the actuary goes through these calculations each year and they come up with these numbers and then they get reported as those deferred outflows, which is in the asset section. So it's an asset-like accounting mechanism. And then the deferred inflows, which are in the liability section, which is a liability-like mechanism. So it just gets deferred over time rather than changing that net pension asset or liability for today, because they're just fluctuating because of what actually happened versus the guess that they had. So you're smoothing that over time rather than just having big fluctuations in that asset and liability. Okay, so that's what all that really tells you. You're in great shape. The pensions are and you know, very well funded, so there's really not much to think about there. Okay, so page 48 describes your TIDs. And there's some jargon there on risk management where because you have commercial insurance, you don't self-insure, you actually give that risk to your insurance company. We just say you didn't have anything in the past year for insurance settlements that exceeded what you had covered. Then there's various commitments and contingencies for different contracts that you've entered into as of the fiscal year end or as of our audit opinion, actually, that just shows this is going to change things in the future. And then we have a footnote on the component unit. So everything for the fire district, we have the same note disclosure that we have for the village. So we've got a note disclosure on cash, those capital assets, which you'll see are just, it's equipment and it's not depreciated. And then following that, we have a description or disclosure for the funds that had negative fund balances, which are your TIDs. And then on page 50, there's some stuff coming down the pike with additional accounting changes. Not much to worry about there from your standpoint. They're going to change how we present the fiduciary activities and how we recognize leases. So I know you guys just got rid of your leases, but what they're doing is they're changing there's no longer going to be a difference between if you have a capital lease and an operating lease. So if you lease a bunch of copiers, you're going to have to report these assets and liabilities and truly deferred outflows and inflows related to those leases. So I don't know if you have some significant leases outstanding, but that will have to come down the pike for December 31st, 2020. So basically you'll just want to keep a good list of anything that you're leasing, even if it's just a rental and you're paying on a monthly basis, because there's going to be things that you have to record in your financial statements. Okay? We have 2 years for that yet, so not concerning. And then on page 50 at the bottom there were various restatements that occurred this year as a result of the audit, meaning that we found things that were not correctly stated by a material amount in the prior year audit report. So for the governmental funds and for the water sewer fund, part of that was the other post-employment benefit liability, because when we implemented that standard, we were required to restate for the beginning balance that we got from ETF. So that's just a sort of one-off. It's never going to happen again. And then we had some adjustments to construction in progress, machinery and equipment and infrastructure. I'm guessing that was based on record keeping and some of the spreadsheets that we may have had in the past. And also that correlates to that restatement on accumulated depreciation. And then the final one is related to accrued sick leave. In the past, it wasn't recorded as an accrued liability as it should have been, and we realized that this year by getting additional information. So we had to record that, and since it ended up being a material amount, we have to show you that it is a restatement. So some of this is related to a change in accounting principles. Some of it, you could call it a correction of an error, because we had better information this year that we could determine that those balances in the prior year were not exactly what they should have been.
Didn't really change the net position though.
It didn't change it too much. So
No.
last year, your net position would have was originally reported as 10.8 million.
Right?
And because some things went up and some things went down, it wasn't a huge difference. But we do have to show you if the individual items are material, what those changes
Okay.
are. Followed by that, there's required supplementary information. It's required by the Governmental Accounting Standards Board that promulgates the accounting standards for state and local governments. And the first couple pages there are related to your pension and OPEB plan. So again, this is what we get from the actuary for your piece of the pie for a Wisconsin retirement system. It shows the contributions made. And because this is a cost-sharing plan, in fact, both are the pension and the OPEB plan, you're just making the payments to WRS, to ETF, and as long as you're making those payments, you're, funding the plan the way that they're deciding it needs to be funded. So just keep making those payments. Since it's a cost-sharing plan, you can't really decrease your liability. Sometimes people ask me, if I have a liability for this, for the pension 1 year, can I just pay more and decrease it? And the answer is going to be no. because it's a cost sharing plan, everyone's in the same pool. So all of the municipalities, villages, towns, every local government in Wisconsin participates together. So if you pay more, it's gonna help everyone, not just you. So I would suggest you don't do that, ever. Just pay that bill, and that's all you've gotta do, okay? On page 53, you see your budget to actual comparison. So that shows your general fund, we're required to present that in your required supplementary information.
I got a
And
quick-
then there's a description of the budget process on the
Quick
following
question on
page.
that.
Mhm.
So the fund balance ending is 84,229, right?
Oh, no, I'm so sorry.
No?
So there's, columns for this, so
Yeah.
there's your original and final
Oh,
budget,
okay.
and then the actual amounts, and then that variance column is what the 84,000 is. So that was your variance from your originally budgeted fund balance to what it actually was, so that's a positive variance. So you didn't think you were gonna get as high as you did, and you got up to 1 point.
So the actual amount,
Fund balance is 1,071,000.
71.
and it was
Yep.
1,080,009, it was almost 1,081,081,000 last year, just,
Yes, so for the general fund, it did decrease slightly
Okay.
by the $9,000.
okay.
Yep. And you can see and on the following page too, we highlight which expenditures were over budget by function in the general, in the governmental fund. Okay. So then the following pages are supplementary information. So this gives you the detail on the aggregate column that's presented as non-major funds in your basic financial statements. You know, some municipalities just have 50 funds, so we can't present all of that in the front of the basic financial statements because it would be too cumbersome to review and use. So we have to present major funds in the basic financial statements, and that's something that's a calculation based on how big the fund is, what the resources are in that fund. It has to meet a threshold, and then all the non-major funds get aggregated in the back. So this gives you the detail on those non-major funds, your TID 4 and 5, and then the Housing and Neighborhood Conservation Fund and the Wisconsin Development Fund grant. So they're the same presentation that we talked about, but just for these smaller funds. And then on pages 57, on page 57, this gives you more detail on the operating revenues and expenses, just breaks it down into more detail for you. And on pages 58 to 59, well, through 60 is a more detailed budget for the general fund. So this is the budget that you passed at the line item detail. That's it for the audit report. I will quickly talk about the management letter, because there's really not anything super important beyond what we already discussed that I pointed out in there. Most of this letter is jargon that we have to include specific terminology and accounting jargon that we get from the AICPA on the statement from their statements on audit standards. So you will see the same language every single year. What changes are our comments. So there's two things that we have to report to you. We have to report to you if we think there are material weaknesses, and we have to report to you if there are significant deficiencies. And then other comments are just our way of keeping you abreast of the things going on in the village, like showing you your rate of return and things of that nature. Okay, so those are not big ticket items. So on page 4 is where we talk about the material weaknesses that we've identified. The segregation of duties is a material weakness that you're gonna see in any government that's this size, okay? You just aren't gonna hire 10 people to do everything that we want you to do. As an auditor and as a CPA, we live in the perfect world, and we have to tell you when things are not fitting into that mold of the segregation of duties that you are supposed to have, okay? You have to weigh that against the cost of that. So yes, it would be perfect to hire a few other people to manage the finances, but if you don't wanna do that, you have to weigh the cost benefit of that, okay? So that's a comment that's really never gonna go away, unless you wanna hire more folks. Now, you can put in compensating controls, which you have done, okay? And of course, we recognize that. And that's why we don't come and stay and audit you for 3 months, because we look at every single transaction, because we realize there are compensating controls. The board reviews transactions, and that's a compensating control. So we're comfortable with it, but we have to let you know that it's not what it should be. It's not perfect, okay? So that's what that comment is about. The financial reporting comment, again, we have to report that because we help you prepare your financial statements. So there are some risks there in self-review that we could get something wrong because we're preparing that for you, and it's actually your responsibility to prepare it. However, it is reviewed by the village, so that's sort of the compensation there. And as part of our process, we have someone prepare it, we have the partner review it, and then we have a cold reviewer. That's a partner that doesn't have anything to do with even our office or the engagement, that takes a look at it to make sure that everything jives, the numbers agree, and things are accurate. So there are processes in place to ensure that things get done appropriately, but we are required to let you know that we help you prepare your financial statements, and they are ultimately the responsibility of the village to prepare. Okay. And then this year we had material account adjustments. So that's just something that we're pointing out, and as you can see on the following pages, there are various adjusting entries, and I'll point out the differences between those. So we do want to mention that, and that's something that we can work towards decreasing with you over time. You know, Jane's newer, so you know, we can work towards making those entries less and less as we go. So the entries follow those other comments I already talked about in the management letter, and then the entries follow this presentation. So you can see what we refer to as AJE. Those are adjusting entries, and those are entries that you have to make in your system to get your numbers to where they need to be in your financial system. Following those, we have what are called financial statement entries, which begin from our system. It all references page 1 because it's a separate presentation. But you'll see it's FS01, FS02. It's a few pages in there. Those are entries that you don't need to worry about, but for the financial statements, we have to put things in the right place. So you don't have to make those entries. And then the last entries are GASB entries, and those are the entries that get you from the funds to the government-wide presentation, okay? So we separate those all out because what we want you to concentrate on are the AJEs, so that we can clean some of those up and not have that material account adjustment comment in future years, okay? And that's something that we have to work on together, because we full well realize that it's not, you know, an easy process when you have less staff, and there's just not enough people to go around to do all of the work that has to be done at the end of the year to sometimes make all of those adjustments. So we help with that, but we have to let you know that we have made those material account adjustments. Okay. That is all I have to say. So
Thank you.
if
Thank
you
you.
have any questions,
I do.
I'd be happy to.
Do you have a card? Do you have a business card?
Yes, I think I do somewhere, I hope.
Because as I dive into this, if I have questions,
Sure.
I want to call you, because you
Okay.
made this
Absolutely.
explanation a lot easier and better than I've ever heard before.
Great, thank you so
So-
much.
So and there will be questions, so I want
Okay.
to, and I won't do
Yes.
one at a time, I'll get a list and I'll call you if I have questions as we
Absolutely.
break into it.
Yep,
Okay,
absolutely. I will slip you something in just a
Okay.
moment.
thank you.
So thank you so much for your time, and have a great rest of your meeting. Have a
Thank
great
you.
night.
Thank you.
Thank you.
Are we ready to move on to B, village Hall open 7/5/19 or close.
That is all me. We have got, obviously, a special calendar coming up here real soon where we're not gonna have a village board meeting on July 4th because of the holiday. We also have a situation where the 5th falls on a Friday. Fridays are 7 a.m. till 1 p.m. The library has already announced their closure. We have every employee in the administration office, including myself, that has solicited for an off day on the 5th, so I'm asking the board's permission to give prior notice and potentially close the village administration building on the 5th of Friday. It would not cost the village anything. Everybody would be using either vacation time, sick leave, or comp time. So we just want to have it in good faith that we can automatically, immediately put the notice out that the administration building would be closed on the 5th with permission.
Are you looking for a motion? I mean, if you need a motion?
I don't think we need a motion.
Just
It's
a
just
blessing of-
a blessing of
Yeah.
the board here. If there's any questions or concerns, we can address it. I did say though, if you're not comfortable, I would be the one that'd be working. I don't want my employees to be off, so I would come in and man the shift for the day.
Just wonder, do you know what anybody else is doing? Any other municipalities?
I
Have
do
you
not.
heard? I was
No.
just curious.
No.
I tell you, most of the companies are closed.
Yeah, it's fairly standard. If it
Yeah.
falls on a Thursday, then
Yeah,
Friday's
why
gonna
should
be
he
an
be in
off,
here
so.
by himself?
Everything else is
I
gonna be
always have
shut.
something to do, so it's at your pleasure. That's how I'm gonna take it. It's not,
I make a recommendation, you move forward and close it.
Yep,
we just
So
want
just
to
make
be able
sure
to
you
give,
publish
we
it.
just want to give certain notice, get it on social medias and get it on our webpage so they can plan ahead.
Done.
And I don't think we have anything planned on that weekend for rentals, where it'd be keys or anything picked up.
Not so far.
Okay, so it's really, it's one of those kind of shut the windows down and close her up for the weekend type of movements. With
But
your
all-
blessing.
But all the employees are using what you printed out?
Correct,
Okay.
correct, because we changed that. We had that instance where I don't remember what the holiday was.
We had that bad snowstorm, and we didn't have a policy in place. I sent a couple of people on.
And with essential employees such as police, they're working regardless. So how do you compensate people that have to work? So we made a policy that says if you can elect to not work depending on weather, but you have to be able to use comp, sick day, or vacation schedule. So they are all covered. Everybody would be using some kind of compensation, so there'd be nothing being paid without being worked. So it's at your pleasure.
I would say we're all set then,
Yeah,
Okay,
yeah.
Yeah.
okay.
agreed.
The only other business before Gene would get into the next items of business, this came from a comment that Jane took, and I'm just gonna address it for what's being asked is that we clarify when it goes to a motion, that we read the motion. We not say so moved, clarify it out, read it out, so it's.
Read it in its
Yeah,
entirety?
Yes, yeah.
Yeah, we were asked to do that before.
Yeah, people are watching on the social media channel that it's come up, so they just want to hear it basically stated. I don't know if it's,
Well, unless you're looking at the agenda, I suppose you
correct,
wouldn't,
correct,
yeah.
yeah.
That
So
makes
they,
sense.
they'd like for, if you make a motion in a second, that you read it out so they can understand it. So,
Makes sense.
just a little housekeeping before Jeannie keeps going on here. So,
C would be amend ordinance 17.10.3 with 010-19.
correct. So if you go into your packet, there are two separate attachments. 17-10 subsection 3. If you look at the general provisions, the old language is, it defines an accessory building as shall not occupy more than 30% of the required area for the rear yard. Any accessory building projected forward of the rear building line of the principal building shall satisfy the same side yard requirements as the principal building. However, it doesn't describe what an accessory building is. And the circumstances that we're running into now is people are asking permission to put shipping containers in backyards as accessory buildings. So the new language, as written on O-10-19, has approximately 1 page of an accessory storage building is, and that is, thank you so much. That is in your packet for your review. Essentially what we did is we added language to clarify what an accessory building is We have a company in Greenville that is selling container ships, cargo containers, and they're very marketable and they're very economical. So we've had requests for people to use as outbuildings in their backyards. And these aren't in just anywhere, these are in some of the newer subdivisions. So with your permission, we'd like to add this ordinance O-10-19 to clarify that and further disallow these types of structures to be put in their backyards of people's homes.
Are there any questions?
I guess I'm just reading it and I'm just trying to look at number 2 here. So the items that are not considered, or are not accessory storage buildings consist of these cargo trailers, railroad cars, trucks, I mean, so anything
You gotta read up there, it says an accessory
Yeah.
storage building is.
is.
Yep. So what they further clarified, it's not just a cargo ship. It can be a railroad car, truck van, converted mobile home, trailers, old mobile homes, bus bodies. People are using just about anything nowadays for storage facilities.
Okay.
So this goes in to clarify and lists all of them as possibilities that we would want to exclude.
That's where I'm getting mixed up with the very final line in number 2 where it says materials are not accessory storage buildings.
If they're built for purposes other than storage.
So, okay. All right.
You just have to step back and
I have
read
to
it.
step back and read it,
Yeah,
and I
yeah,
did
yeah,
reread it
yep.
yesterday, and I kept reading it, and I just wanted to make sure. So if somebody has one of these cargo trailers, you know, how are they gonna read this? This is just.
There's currently one in the village and there's nothing we can do about it. It's a commercial building that has it. So, I mean, it's a
Okay.
pre-existing, from what I understand, it's been there a long, long time, so.
Okay. Then I don't have any more questions. I just, like I said, I'm reading it as somebody who would wanna put something in there. Not that I want to, but I'm trying to read it from a resident's point of view.
I'll make a motion to amend ordinance 17.10 subsection 3 with O-10-19.
Second.
All in favor?
Aye.
Opposed? Motion carried.
Okay, can I just interject something here? Tonight's my last medication. I leave Sunday for Nashville, so 7:30 is my usual time. I'd like to quickly make my report, if we could move it up, if it's okay. My report is, of course, on the Hortonville Civic Association. We had a good turnout. We netted about $3,200, which Carl and I are gonna spend on some concrete work at Alonzo Park. The other thing I'd like to work with Carl and Dave on for consideration in the future would be a Wi-Fi controlled LED sign, two-sided, in Alonzo Park where the village would own and our technical guru Nathan would manage via Wi-Fi, and we use it for selling advertising.
We had talked about doing something like that at the Opera House.
Yeah, oh, at the Opera House?
Yeah.
I think you're gonna lose a lot of traffic. My point is, there's a lot of school traffic there that turns there, and you get a lot of people going through town. It's for future discussion, but that's basically what I wanted to let everybody know. Okay? Other than that, I had nothing else. Carl and I will work on the concrete stuff that we're going to do at the park. And with that, I would like to be excused, if I may. I will not be here for the last meeting in June, nor will I be here for the last meeting in July. So I'll be gone for 2 meetings, so please excuse me for those meetings. I should be back from treatment by the end of, probably the last week of July. Okay?
Best wishes.
Thank you.
No, you're
Good luck,
helping-
Peter.
helping me out. It's more
Yeah,
important.
you know, I've been fighting this for 2 years now this month. So it looks very promising.
Good for you. I did mention you in my report, so.
I see that, I read it. And of course, I always love to be here. I just enjoy your faces and the camaraderie, and working with you guys, so.
So if we need you, we can call you.
We can Skype you in.
You know, we talked about that, we could Skype, I don't know.
We can make it
I
happen.
think we
Can we Skype it
absolutely
in?
did, in case we were short.
Yeah, we could.
All right.
Because the July
Even just a
18th
Google
meeting,
Hangout or
we've got
something.
3
Because I
people out.
won't
Well, you
be
can
here
always come down to
for
Nashville and
July.
hang out.
Via phone if necessary, we can do.
No, Peter, that would be Google Hangout I was talking.
But by the way, Peter, thank you very much for your work with the homecoming. My kids had a great time this year.
Yeah, good. Oh, I
Except
did
for
want
the
to mention one thing.
Multiple times they puked. but-
Mike Bailey, who had, what? I
Except for
lost
the
that.
multiple times they puked on the rides.
Well, I heard about that.
Oh, goodness.
You know, Mike Bailey, who started Big Ferrari, is a friend of mine. He's coming back next year.
Good.
Yeah, so we're gonna bring him back next Saturday night. Oh, not Saturday, but next year on Saturday night.
Mike's the big
I-
one.
Yeah.
I specifically wanted to say thanks for, I know that the vendors push back on the wristband thing that they have in the past anyway, but.
The what?
The wristband thing?
Oh, for
I know
here?
you had talked in previous years that it had pushed back on, they didn't want to do that.
You mean for the rides?
Yes, for the
Okay.
rides for that. So thank you for, working it
Yeah,
out.
you know, it used to be that way years ago. But, you know, if you wanna come out from 3 o'clock till 10 o'clock or 11 o'clock on a Friday, which is a good 8-hour stretch, bring the kids for $25 a head, they can ride all they want,
Yeah.
you know? It took me some convincing to do,
And I
But we're
figured
doing
that,
it.
so I just wanted to
Yeah.
mention and say thank you.
all right, thanks you guys. I'll see you in about 2 months, or a
Okay,
month
let's
and a
go,
half.
you call us too if you need anything, okay?
Yeah, you know, we'll be in touch. You know, if you wanna Skype, I'd love to Skype, but we'll see what happens.
Okay.
These your keys, please?
Oh, yeah. I think it's a while.
Nah.
We'll see you guys.
Okay.
Take
I'll
care.
send you an email, I'll probably front the concrete.
Did you have a hat?
And then I'll front the concrete project in the week.
Yeah, but then you're paying for them. I'm trying to get them donated
Okay, well, just keep it
from
light.
Mike, from Murphy.
All right.
Okay, I'll keep you posted.
D, amend ordinance 17.286 with O-11-19.
Same thing, 2 separate pages in your booklet, in your packet here. So that if you read the original language, essentially this is a spin-off of the one we just amended. However, this relates to permanent structures in the village as well. So we just covered the accessory side of it, but we also didn't have anything in our ordinances that would allow for, or disallow these people to use cargo containers as their permanent home or structure. So 17-28-6 is the language that tells you travel trailers, recreational vehicles, and buses for habitation are not allowed. But what we did with the new O-11-19 is add, and I highlighted on my copy, but it's not highlighted on yours. So if you go into the paragraph, we added bus bodies, cargo containers, railroad cars, truck vans, converted mobile homes, and similar mobile home recreation shelters. Because it's gotten that discrete, they're using all different methods, so I felt at this time we needed to add that language if we had it in the accessory buildings, that we also put it in the permanent structures to make sure that people aren't trying to get one under on and say, hey, this isn't my accessory building, this is my permanent structure. So we had to cover all of our bases, so
Makes sense.
essentially all we did is add the clarification and the definitions of what it is to the permanent structure as well as the accessory buildings.
Are there any questions?
So this is just covering that you can't use this as a residence.
Correct. And Jim, the only thing I did is I added 1, 2, 3, 4, 5, 6, 7 descriptions. It'd be the third line, second and third line of the new section 6. We added more descriptions into that to clarify. Not that we left anything out and then they come back and say, well, this isn't a cargo container, this is a railroad car or a converted truck mobile home, and it's not qualified in your ordinance code. So these are about as many of the descriptions that I could possibly find for what somebody could put in their yard and live in. So aside from a jet engine or a jet plane that somebody might park there and say, well, this isn't a cargo ship, this is an airplane, I'm gonna live in it.
Okay.
So, and I wanna see
So,
that happen.
and special use would be like if your house is flooded out and
Correct.
you need to, okay.
Temporary.
Yeah, it's a temporary, okay,
Yep.
okay.
So again, it's a cleanup, a little bit of a cleanup here, but we had to cover our bases and make sure that they didn't, well, I'm not using this as an accessory, this is my main structure, so.
I'll make a motion to amend ordinance 17.28, section 6, with, is it O-11-19?
Yes.
Okay.
I'll second it.
All in favor?
Aye.
Opposed? Motion carried. E, amend ordinance O-12-18 with O-12-19.
I'll take this one. This was just a clerical error from back when we first decided to do the consent agenda. And when Nathan was updating the ordinances, he found it in the fourth paragraph. It says 2.20. It should read 2.02.
And
So-
because it's an ordinance, you have to redo the ordinance.
It's just, yes,
Yep.
just basically a clerical error.
Then I'll make a motion to amend ordinance O-12-18 with O-12-19.
I'll second it.
All in favor?
Aye.
Opposed? Motion carried. Amend ordinance O-7-19.
And I will take this one. Once again, when Nathan was updating the ordinances and putting them in, 7.05E10 was taken. So this should have been 7.0511. So that's, I don't want to say another clerical error, but yeah. So we need to fix that. Then we should be good for clean up on our ordinance.
And this is the 48-hour one we just did, right?
I'll make a motion to amend ordinance O-7-19 to reflect the correct section of 11 versus 10.
Second.
All in favor?
Aye.
Opposed? Motion carried.
Thank you to the deputy for watching over the clerk.
Yeah, thank you.
Nathan.
And the police chief. Oh, I had the wrong book.
That's
G.
possible.
And the wrong book.
There's a couple floating around.
Addition of third fire commission member for the village of Hortonville.
Do you want me to explain this a little bit, Gene?
Please.
Okay, so Jim and I were in attendance at the fire commission meeting last week at the fire department. It's been an ongoing practice for Hortonia and Hortonville to alternate two members for Hortonville 1 year, then 3 members, and they used to go in like 2-year periods where, because there's 5 members on the commission, so Hortonville would have 2 for 2 years, and then they go to 3 for 2 years. Well, according to Bob Lutke, Hortonia has now had it for a better part of 8 years. So at the recommendation of him, he suggested that we pick up the extra person to add to the fire commission to represent Hortonville. So I presented it to Jean after the meeting, and I said, we may want to think about this. I made a recommendation to her that you all are sitting on enough committees that we pick somebody from the general public, and it would be her recommendation moving forward. So it'd be your appointment, if you have somebody, Jean.
I do have someone. I would like to appoint Michael Lyle. And do I need a motion or just a roll call or?
It would come to a vote, yeah, just an approval, and
Dan?
Motion to approve Mike Blau to,
be a
as third
representative.
fire commission member.
Do I hear a second?
I'll second it.
Real quick before we vote, so do we want to put like some better wording on this so that we don't run into this later, or is this just gonna be?
No, essentially it's from what I understand, it's pretty much a handshake agreement
Okay,
with Hortonia.
okay.
Um,
Not a big deal, I just didn't know.
And
if
Bob
we
didn't have a
need
care in the
support.
world in the matter. He just said, it's your turn.
Okay,
So there may be
Yeah.
some significant things that we vote on in the future that we want 3 versus 2.
yeah,
So,
that's fine. I just
you
was
know,
thinking if we had to
yep.
clean something up,
Yeah.
then we could put that on.
and
the
it's a
agenda.
quarterly appointment, so it's not like this meets weekly or monthly. This is more or less a quarterly commission meeting.
Mhm.
So,
Great, that was my only question, thank you.
Darren, do I hear a second then? Was it?
Alrighty, second.
Okay,
Yep.
all in favor?
Aye.
Aye.
Opposed? Motion carried. H, clearing and site prep of TID 3 lands adjacent to Gilbert's.
nothing we need to vote on. However, I want to make you aware that this is a 2019 budget item that we allocated $15,000 in the 2019 budget. So it's already been approved with that budget process. And Carl has, you can take the lead if you want, but
Yeah, I'll take it. I had reached out to Public Works Committee Chair Dan there and just mentioned that we had these on-site logging company working on Grandview, and it just kind of fell into place that we shift them over to that property next to Gilbert's and have them clear that lot. As far as value, you can go out for bids, but everybody's going to be different because it's hard to quantify trees and brush to clear. But I think compared to some of the numbers thrown out by potential developers and what it would cost to clear that, I think this is a good value. So again, like Dave said, it's in the budget, but we're gonna, just a nod, we're gonna go ahead and have them clean out that property next to Govert's. We are gonna keep all the big pines on the hill though, so those will stay. So, I don't know.
Carl also discussed this with Jeff Gilbert, and got the graces from him. I will address some more of this language in my report coming up, but we do have some activity and some prospective activity and purchases on, or intent to purchase on the property, so, and we've had discussions with them as well. So,
Yeah.
nothing we need a motion, I just want to bring it to your attention.
Okay. It's gonna save basically get a bigger unit in there and save a mobilization, so.
Yeah. There are gonna be, I talk about it in my memo as well, there's gonna be some chips created from this, double ground chips. They're also grinding up the wood, the excess wood from Grandview and the wood from this, those two lots, and we'll make that wood available to the public. So the chips available to the public, and some wood, but primarily chips, so all good things.
Good. I, R-8-19, pricing for health insurance ETF.
We are, and this is something that, we're gonna throw this one out because, we did not, I put this on and I, after the budget was, or after the agenda was set out, we did not meet the requirements for this period, which would be their October 1 period. So essentially what ETF requires is a resolution by a village board or city government in order for them, for your inclusion into their pricing pools for health insurance. I'll say more in my little report coming up here, but what we're looking at is a 6 to 8% increase in health insurance from last year to this year. So we've been proactively seeking other parties, other participants, other options for health insurance. From what we're hearing, ETF, which is the state program, is one of the best that we can enter. If you're part of the resolution, you get placed in the pool. By the number of parties in the pool is how they set their rates. So right now, we don't qualify for this timeline. What we're looking to potentially do is take our current healthcare coverage, which ends in September, extend it to the end of the year, and then we would line up for the January 1 pool, which would be better for us anyway for budgeting. We're on the annual calendar then. So I'll be coming back with this type of resolution in September to put in front of you. So this is basically something that we were gonna do, but we can't do it. So we're just throwing it out, no action taken on this.
Okay.
But, and I'll address health insurance in my administrator's report as well. So nothing on that one.
J is any other miscellaneous topics for future discussion? Anyone have anything? If not, we'll move on to 9A, administrator's report.
Separate handout for y'all that was given to you before the meeting. $25,000 payment to Chris Books was paid this period as part of the executed developers agreement. This represents a substantial completion of the project. This $25,000 payment was built into his developers agreement. So he reached out to me last week. Carl and I did walk the property. Substantial improvements in infrastructure, curbing, blacktop, sidewalks, grass, earthwork today. I'm expecting trees and grass to be planted within another week. He wanted to have it done by mid-June. So the property's looking great over there. So that money was put on a voucher and was with your, I think is on the vouchers this time around, right? Okay. Another bill in the total of $5,300 was the final bill that was made payable to Carroll Land Surveying. That executes the final survey maps for the Wildwood Park. Final signatures are being acquired right now. Those maps have been drawn. They are in the village offices. All the parties have been contacted. So the people are coming in, they're signing off, basically accepting the property. In discussions with Carl today, The $5,300 that the village is putting into for this surveying will be paid back within 2 years of not having to service the park. So we haven't cut there this year, so essentially by 2 years of not servicing that park, we'll have this $5,300 paid back. It costs that much annually, approximately half of the $5,300 annually to maintain that park, so it'll have a 2-year payback. We haven't discussed where that money's coming from yet. We have it earmarked, but it was park.
Either that or land and buildings.
Okay.
One of them reserve funds.
One of the funds that we discussed earlier that we could grab from. So it was not a budget line item, but we have funds in reserve that we can grab. As I stated earlier, as part of the TID 3 development fund, $15,000 was earmarked for the 2019 budget. $12,000 has been committed to the on-site logging to clean and brush out the 2 village parcels adjacent to Gilbert's Grocery. Like I said, it was in the budget. We're close to finalizing sale of the lot to a prospective commercial developer. I had conversations again with that developer. I don't know if I want to go on record and say who it is, but they're very aggressively seeking the sale of their other property, and they're almost 100% committed to the property. So if anybody wants to discuss afterward, I'd rather not make it public yet. Strong Bodies as well as Tai Chi classes have been committed to the Opera House for this fall, and they'll run through 2020. So those will add to the list of amenities that we're offering to the village members. They'll be utilizing the lower level of the Opera House as well as the gym for some of their classes being offered.
And is that ADRC?
Yes.
Okay.
Yep. Met with Nancy again this week. So they're very happy to be back involved with the village. As reported in the paper this week, energy consultations have been conducted for the Village Hall in order to study the energy consumption, pricing for LED fixtures to switch from sodium and fluorescent. We've had Wasmer Energy Systems as well as Master Electric out of New London. We are meeting next week with B&H Lighting as well to receive our 3rd quote. At that point, I want to make a recommendation to possibly meet with the Public Facilities Committee to discuss the findings and see if we can come up with a recommendation as to if that's something we want to move further on. So that'll be something I'll address in Eugene, put that committee together to potentially go over those findings before we put it to the village board, okay? The Grandview project is well underway, as Carl had talked about. A lot of the trees have been removed. As Carl stated earlier, brush is being transferred and staged behind the Gilbert's grocery store. The intent is to chip and brush and mulch, make mulch available. We discussed it with Chris Schultz. We want to do some of the village trees and in the village campus here, mulch around some of our stuff first, and then make it available to the village residents. And from the pile that's building up over there, I think we're gonna have a lot of mulch. Looks like we're gonna have a pretty fair share of mulch for people to grab at their own convenience. Brookwood Drive is also progressing nicely. Carl and I were out there yesterday. Breaker course and top coat of gravel is in place. They're going to start stringing. I'm not sure if they did today.
They got it staked. I think they were going to come back in and string it to either today or tomorrow.
So that would be setting up for curb and apron. So it's moving along nicely. Something that I've started with all the department heads are the one-on-one department head meetings. I started this past month. I feel it's important as we zero in on budget and health insurance discussions that I use their advice as well as my own. However, I made it very clear that this is their time. This is where they get me one-on-one if there's any concerns that they have. So I wanted to make the board aware that aside from our group meetings, we're also meeting on a one-on-one basis. We did start the deep dive on health insurance. As I stated earlier, our enrollment period is September 1. Talking with Ray Ann Beaudry of the Horton Group, who's our broker, we are at expectations of a 6 to 8% increase over last year. I've currently solicited 5 different companies for pricing and explanation of benefits. So as they all come in, I will hopefully be able to dissolve it and have a spreadsheet that we can look at the best option moving forward. Jane completed the board review on the 21st. We had no visitors. So nice 2-hour visit session. So fire department commission meeting was on the 30th. Jim really didn't have anything to report. I can give you a real rough run data. To date, 90 EMS calls to the village and approximately 20 fire calls. That was what they had estimated for the first 5 months of the year. Chris Bronson, chief, allowed me to meet with the full-time PD people at the pistol range in Shiocton last week Friday. Again, in retrospect to what happened with the EMS personnel in Appleton, I wanted to address what I would always call our essential service people, our police and fire, and tell them that, hey, we thank them for what they do, and that I have an open door policy. So I wanted to keep in good graces with them and let them know that we appreciate what they do for the village. And again, if there's anything we can do to help them, a lot of times we don't interact with the PD. You know, we see Chris, but we don't get to see the officers. So it was a good time for me to get in front of all of them and learn a lot about their training and what they do. I'd say it's one hell of a resource in shop in that pistol and rifle range. So again, I wanted to thank Peter before he left, but I was able to attend a little bit in the afternoon on Saturday. So kudos to Peter for the Civic Association for the Hortonville Homecoming event. It seemed like the crowd was down a little bit during the weather, but from what I heard, it picked up nicely on Saturday night. Kudos also to the Legion and Auxiliary for their Memorial Day and allowing me to be there, give the presentation. I was thoroughly impressed with everything, whether it be the choir, the band, and everything. That was a nice day. So, especially the band. That band is awesome. So, residential development continues for the village. Building permits for the month are positive again. Again, happy to announce more is looming. I've been meeting regularly with Jim Clegg, Richard Kinnison, Jason Hina, Vance Construction, Brian Parker, and Wolf River Bank. Good things are coming. I can't make promises, but I know we're about ready to blow up here with more development. So we are almost at what we were last year for residential development. So
Last year was good.
yeah, and last year was good. So we're at, and we're going to exceed that. So things are looking great. External meetings this period. I attended the State Lobby Day in Madison, and you can see by my comment, disappointing results. That was tough. I thought sitting in the offices of our local legislators was a good thing, and I thought it was a tough practice up here, but when you go to Madison and you get basically a minute at a time, it shows you that, in my opinion, it's broken. It's a broken system. So it may be tough for me to ever go back on a lobby day to Madison, because I didn't think it was worth my time to go to Madison, and that's unfortunate. So May 23rd, part of the Fox Cities Economic Development Professionals meeting in Appleton. Today I attended the 2040 Comprehensive Plan for Greenville. Nothing really I can report on that. They did their map amendments, and they're laying out their planning. They did address the need, as much of the land that abuts the village of Hortonville is in their Tier 3 programming. They are now currently, with this plan built out for 2040, they will be addressing the boundary level agreements with the village of Hortonville as well as Hortonia and Ellington. So we will specifically clarify in that corridor on Highway 15 water and sewer service agreements. That was also brought up today. So it is not out of the question that if anybody would come forward, that we would extend water and sewer services to that area. So, and they would graciously meet that. They just don't want lands being acquired. So, and then also today, June 6th was the Fox West Chamber meeting in Grand Chute. So, any questions?
If not, we will move on to D, clerk treasurer.
I just want to report that for two bank accounts, for 2 months of interest, we earned $10,219. That's just for 2 accounts.
That was 0 before.
One of the other banks, I haven't gotten all the final numbers. They said it takes a little bit of time to get all that, but she said they will be coming in, so I'll report on that. Once I know those.
Good job, Jane.
Yeah, absolutely.
Any questions for Jane? If not, we'll move to C, director of public works.
Dave hit on the Grandview project and the TIDs. The guys worked overnight last night painting crosswalks on Main Street. That's the only safe time of the day to do it, is the middle of the night. So thankfully they came in and did a nice job there, got all the crosswalks painted in town. We installed some right turn only markings along on Nash Street, primarily due to the fact that they were faded out and the county's not coming in for another month and a half to pave repave North Nash, which is going to happen late next month, I believe. anyways, they were hesitant to paint the right turn only signs because they're gonna mill it up and repave it, so we just, the village ponied up a little bit of paint and put those markings back down. I wanted to comment on Memorial Square. Once again, Holly and Tom Betcher from Whistler's Knoll sponsored the flowers down there. It looks beautiful. And we're very, very appreciative of what she's done for the village. The CMAR, which is a compliance maintenance and annual resolution, will be at the next board meeting. But what I'm going to do is email out that report to you guys so that you can look at it. It's basically how we grade the operation of the wastewater plant. So I'll email that out to you, and if you've got any questions, just email them back. And the one thing that's not on the memo is the tower. We're painting the inside of the tower sometime late. Well, I don't know if we're doing it this month or we're going to do it in late July. It's still up to the contractor. But anyways, when we paint the inside of the water tower, typically we'll put the well on hand and wastewater out in the industrial park. Could be millions of gallons. But due to the time frame that it's going to take, they said it might take 42 days to get the tower fully sandblasted, repainted, and ready to go. And with the power outages we had the other day, if we experience a power outage while we're pressurizing the system with just a pump, with no water tower, we could go into a boil water alert or something like that. We'd have to issue an advisory. What we're looking at is got Ryan looking with one of the company that rebuilt well one for us. So they've got a system where they can bring some tanks out and basically keeps the system pressurized for up to 15 to 30 minutes if the power goes out. And that would give us time to go down there and fire up the generator. We don't have backup automated generators at the wells. So I think it's worth the investment. It's probably 10 to 12 grand, but the idea, the thought of going 42 days without a water tower, I've done it in the past, but that was quite a few years ago. I'm just not as comfortable now with the increase in storms that we're seeing. I'd like the assurance of having something there to maintain pressure until somebody can respond.
What months of the year is this gonna happen? Do you know, like over summer, or is it?
It'll be the summer,
Okay.
yeah.
But I'm just thinking with the school district, they're probably one of the primary water users in the village, right?
Yeah, for their ball fields, but they're we have restaurants that use more water than
Okay.
school. Blackwater, places
That
like
could
that
be a
use a lot of
nightmare for
water.
boil water of schools.
Again, I'm
Well,
concerned
it's
about
too
boil water advisories.
Right.
I think it's worth the investment to get this mobile pressure system set up. I'll know more next week, but anyways, I just wanted to give you a heads up that that's an expense that is probably going to happen on the fly, so we'll be fine. I just wanted you to be prepared for it. That's all I got, unless you got something for me.
No questions for Carl? Dean, Chief of Police?
We had that audit for the state of Wisconsin that we were working on. We got it to them. They turned around, they sent us back a couple items that we had to kind of clean up and everything else. We had to have that back to them by June 4th. We got them done right away because there was just very few of them, and so we're all done with that. So we had a couple recommendations. One that I had spoke about at the last meeting was the filing cabinet to secure the server and things like that in. And then the other thing was how some of the warrants are being entered. So we had to buy a stamp that says received so that we could stamp it and know that it was stamped if somebody came in and actually looked at the paperwork. So so we have a stamp ordered, so that should be coming very soon, but I think we did pretty good. So we participated in the Fox West Academy 5K that was on June 1st. It was nice that we worked together we had 5 EMTs or EMS for the first responders and 2 firefighters. So the 10K actually got canceled because it was just a downpour. So it was unfortunate that the weather was bad, but people were still laughing and in good spirits as they were walking. So a while back I had talked about hopefully we can get some speed boards. These are traffic calming boards. And we had, don't look directly at it because it's gonna flash. We had a village resident who donated 2 of these. $7,000 donation for 2 of them. But they're traffic calming boards, but they do a lot of things. This one here, she wanted to upgrade it. She wanted to upgrade it, it'll say, slow down too fast. We can put that message on there when it's coming. I can actually operate the speed board from my cell phone. This will go on all the officers' phones and they can see that, say for instance, if we put it on southbound Nash Street and there's cars that are flying down that street, it's gonna let them know and they can head over that way and they can slow traffic. They have mounts. There's 10 mounts that she had purchased. We can move the mounts around, but Carl and I went out with Rob and we selected 10 spots to start out with. But say for instance, somebody's speeding in your neighborhood and people are complaining that this is going on, we can actually throw a bracket out in your neighborhood and we can count how many cars are coming past the speed board at what time and how fast they're going. So this is kind of cool because we use the same speed board in Shiocton and it's run by battery in the back. This is totally locked on there. It's got a lock on the bottom. So they're lock proof. So everything is on there. It comes with 2 batteries. So it'll go and run for 5 to 7 days. All you have to do is just swap out, put the fresh battery in it, take the other one back. So this can be actually operated 24/7. So it's kind of cool. You're going to see these out. Hopefully, you know, they calm the traffic as that's what they're supposed to do, but they're also great data collectors. When I went to Shiocton, we were working until 12 o'clock, 1 o'clock, 2 o'clock in the morning. And by putting the speed boards out, we found out that the traffic kind of like everybody's tucked in and gone to sleep and 6, 7 cars went down Highway 54 at 1 o'clock and it's like, why have somebody on till 1? When the traffic was so heavy between 3 and 4 o'clock in the afternoon. So we just kind of changed our schedules around and had law enforcement there in those areas where we needed them. So Darlene Bozen, so we met with her and we thanked her yesterday. She had came in, so it was kind of cool. So yeah, I just want to show everybody. So when you see them coming, when you see them out there on the pole, and you go, "What the heck is that doing?" They're capable of taking pictures too.
Okay. We put one on Mill Street because we have bad traffic there.
Oh, I know.
Mill and Bath, they fly through those stop signs all the time.
Well, it's not gonna tell us that there's stop signs, but
Just kidding.
yeah,
But dude, it's ridiculous. It's fast and loud.
and also they can be in like stealth mode, so they'll look like this, and the cars will be driving by and still collecting data.
Does it dim at night? That was kind of bright. Just thinking if I'm driving at that thing at night and it shines, not the number, but the little circle, I mean, that was a, like,
That's
Well,
only if you're over the limit. though.
That's
Oh,
all.
that-
That's
yeah.
only if you're over the limit. It's
So
gonna do
now you
that.
know how to, not be blinded.
yeah, well, I'll be
Like,
blinded,
just
then
go
I
the
won't be able to tell them fast
The
enough.
College Avenue Bridge has one like this, I
Yeah,
think.
I mean-
The College Avenue Bridge, when you're coming from like the Kimberly area into Appleton, and it will flash like that if you're, and it's a great way because it does go, I mean, you're going over that bridge and it's 25 miles an hour.
Right. And
Yeah.
people hit the brakes.
Yeah, I've seen one in 3 Lakes every time I drive through there, but,
Mhm.
I'm just saying, it was very, very bright when it,
Well, that's why I said, don't look at it when I turn it on, so, but,
That's cool.
because it is close, but, I mean, normally, by the time that they're getting toward the speed board, because it'll, like, pick up speeds at, like, 250 feet away from it, so. That's it, I don't have anything.
When do those go out?
I am working on, the Bluetooth feature. We have to get the brackets
brackets
up
up.
yet. We're
Which
still-
probably won't be till next week.
Yeah.
so are they
So-
mounting on like existing signs or?
Well, you have to put it above a speed limit sign, so
Above it, yeah.
it says speed limit 25 miles an hour, then you put this right below it. So we try to
practice.
get them on there. The only one that we don't have it on a speed limit sign is gonna be the one right out here at the end of the driveway.
Okay,
We're gonna put it on the crossing right below that, because you can see the speed limit sign right past it.
You were checking with the county to see if it's
Yep.
okay to use their post?
When I had spoke with Cindy Roberts, she said I don't see why not, but she was waiting for Dean, but Dean's been in training all week, so. Do you find, I mean,
I don't think they'll have a problem, but it's be worth to let them know.
yeah. I'm
Well,
like,
I'll let Andy know. I just, like I said, Dean's, everybody's been swamped. It's a busy time of year for those kind of guys, so. We'll
I'll
check
touch,
with Andy.
yeah, I'll reach out to Cindy tomorrow.
I think it's a great way to like, so if the one officer that's on duty is on one end of town and this is on the other end, and if they get an alert on their phone, it's as if having two officers technically on duty at that time. Yeah.
so is there a service you have to pay for to get connection across town, or how does that
No,
work?
it's just an app.
Yeah, but
and-
Bluetooth only goes so far, that's what I'm.
Well, no, well, it's an app, and I actually, I put, it goes onto the phone, so as soon as I turn it on, I put it on, and then it just kind of,
So it's collecting data and then,
Yeah, it's gotta have like a cellular connection or something,
Yeah.
so there's no service you have to pay for?
no,
Okay,
it's built into the speed board
and
already.
then when you go up to it, it'll pull off
Is it-
Wi-Fi.
is that how that works? Is when you get close to it, you can pull the information, or is it?
No, it'll send it to you. It calls, it does like a call. So it's got a Bluetooth in it, actually.
Yeah, but Bluetooth
Bluetooth
only works
only
from
is
30 meters.
I don't know, I haven't,
And
like I said, I
it's
haven't.
really sketchy at
Well,
that.
no
distance.
different,
I
no
think-
different than the clock that gets a radio signal
Right.
once a year,
Yeah.
or once a day, that automatically sets your clock.
Yeah, I'm in the process of setting up the Bluetooth, but they're like, it'll alert your officers. Somehow the speed board calls your cell phone, it's talking to it.
Okay,
It'll be interesting.
yeah.
I do have a question about the no-through. Have you noticed a decrease at all in that? Because as we're sitting here
Well,
and
we
just
had-
watching, yeah, and I get
We
it.
had a decrease, but now with Grandview closed,
Mhm.
now they're using it as a shortcut again.
And you contacted the school district, right?
Mhm.
Because my
Yep.
daughter said she had not heard anything at the high school, like no announcement, nothing. So
Yeah, I
I'm curious how they notified
Well, I don't know, I made contact with Bar, so.
students.
And the
Yeah.
signage is up?
Yeah, it's
It
all,
is.
Like through here too?
Yeah.
I've just been looking at it.
we've been taking her driving and she noticed it right away. And I said, well, you knew about that because you heard about it at school. She says, no, I have no idea what you're talking about. So,
Yeah.
yeah,
Yeah, he said that they made an announcement.
okay.
I talked to somebody that's in the high school and they found
They-
out about it. I mentioned it to a friend who's got a high school age student, and he said, yeah, I mentioned it to him specifically about the Dairy Queen, and he said, yeah, they told us at the high school, so.
Well, she's
maybe
been
they
out
just
for
missed
AP
it.
exams and stuff too, so I suppose she could have missed it, yeah.
Any other questions? We will move then to E, Library Director.
Our summer programming starts up on Monday. I do have flyers of our programs if anybody is interested. As of 5:30 this evening, we have 316 people signed up, 232 kids, 25 teens, and 59 adults. So we're at a third of last year's total already, and we've only been open for registration for 8 business days. So that's a significant increase from the rate it went up last year. We have 12 gift baskets or raffle baskets on display in the library now, with 3 more expected. 12 new cards in May, and we're really excited to get our programming up and running. A lot of really exciting things happening at the library this year, and we're just blown away by over 300 people have signed up in 8 days. That's blows our minds. We're having a little bit of a hiccup catching up, but and it's only going to get more once the schools are officially out. So tomorrow we're expecting a big push at the end of some of the school days. So we're very excited.
Any questions for Ally? F is the attorney, and he is out. G, the building permit report is in the packet. 10 is communications and miscellaneous business, Black Otter Lake District News.
I just wanted to mention for that, the next meeting is July 17th for Black Otter Lake District. Annual meeting is the 19th of August, and what we're doing this year is we're gonna have a brat fry and hot dog grilling down at Alonzo Park. We hope to do that, hoping to draw more people there. There was a couple, Becky and Cole Gridgeny.
They live on the, yeah.
Yeah, they live on the lake. They came to our meeting and want to be involved, which is really, really good. And she works at Cedar Creek Meats, offered to help out with the meat purchases and that kind of thing. So we're gonna, I think a lot of people don't know what the Black Otter Lake District is or does, and I think everybody that wanted to be that applied to be a trustee mentioned the lake is a good resource and what can we do. So we're hoping to get more people at the annual meeting for that. Have food, they will come.
B is Hortonville, Hortonia Fire District News.
We had a meeting, David and I were at, primarily they covered the budget. There's one small issue in the budget. It's Town of Liberty not paying quite enough money, and the Hortonville executive is going to go to their board meeting, try to straighten that out. EMS brought up that they would like to be compensated on a pay per call for gas, at the very minimum for gas and incidentals. Right now they don't get paid anything, and the verbiage they used was, you know, they're going in the negative, right? Because they're putting out their own money to go to these calls. They've had 104 calls already this year. So that was one of the things David and I both mentioned that we would bring up. There is the potential to possibly get to work with Gold Cross for that.
I've been making some calls on that. So I reached out to New London. What happens is the problem with Gold Cross's billing. A lot of the municipalities, and it really only the only way it's clean is if we would ever set up a billing procedure with, is if we had our own paramedics. It's hard to attach a bill onto something that Gold Cross is already billing for. So I haven't found that perfect meal plan yet, how we can do it.
And even with the consortium that we're in, that there's other municipalities that.
Most of them are in the same exact situation where they just kind of bite the bullet. What we're finding, and Jim and I, we had a pretty good discussion on why we're paying for medical supplies when we are contracting with Gold Cross. You know, essentially a lot of what's happening is on these, the medications that might be in the first responders units for Hortonville or Hortonia, a lot of them are expiring before they're being used. So they're replenishing them. A lot of the times if there's a call, and the way the EMS for Hortonia and Hortonville describe their services is we extend life for 20 minutes. So we save them, we keep them alive until Gold Cross gets there to transport. In good faith, what Gold Cross usually does is anything that's consumed out of their unit, they replace immediately or within the next day or two. But there's still that detached. We're losing out on enough where it's costing us a couple $1,000 a year. That's where we would try to collect for services. It's just how we do it. We don't have that procedure yet. So working on it. I actually spoke to the New London today. He recommended Clintonville. I talked to him. Clintonville is different because I believe they have their own paramedic service.
Yeah.
They're not a part of Gold Cross. Completely different. You know, where they can just up their bill and up their billing procedure. We have to find how we do it. It's not really been. There's no clean path for it.
So one of the suggestions was to maybe talk to Gold Cross and see if before the medications hit their shelf life at, you know, half of their shelf life, somewhere in that range, we could potentially exchange it out with Gold Cross, swap it out with something that has a newer shelf life, whereas they would have the capacity to use up the drugs before they expired and they'd have to be disposed of. So that could potentially eliminate the cost, but it would require some sort of a process to be set up and with Gold Cross and the EMS department as well. The cost that they are looking at, I think, I don't remember, my notes say it's like $10 a call, is that right? Or is it $10 an hour?
They were looking between $10 to $15 per person per call.
Yeah. And
So my questions immediately to them were, okay, we're gonna exceed 200 calls per year, so let's do an average of 200 calls. 2 to 3 people per call, so I'm gonna take the worst case scenario, $45 per call. Multiply that out by the 200, you're at $9,000 for the year. And a 60% ratio, basically rough math, says Hortonville's on the hook for about $5,400 that we'd be looking to co-op payment to these EMS responders. Essentially what they're saying is, we don't start seeing something, it's gonna be hard to maintain employers, or it's gonna be hard to keep first responders in line.
Yeah.
They're not looking for big paydays, they're looking to be compensated, help with a tank of fuel once a week maybe, something, you know, and what's happening is they're going all hours of the night, you know, when the girl, what was her name, Jim?
Tracy,
She was
she
having
lives right
to-
across from me, I see her
she
headlights
was-
come on in the middle of
She
the
was
night.
dragging, you know,
Oh, yeah.
you know, that's a valuable service. And she hit it on the head, we extend life by 20 minutes until Gold Cross can get there. And that's, I guess that's the way you really gotta look at it,
Yeah.
so.
Yeah, we had discussed, you know, separate billing and, or anything, but, I mean, to me, it didn't seem unreasonable for them to ask for something, at least
Correct.
to be compensated for their gas,
Yeah.
to go to the service calls. And like Dave was saying, they really alluded to the fact that it's hard to keep, it's making it difficult to keep people on their EMS staff, when they're having to pay to be first responders, basically.
And for the most part, it's not, we're not seeing 3 or 4 of them showing up.
Okay,
during-
that was their estimate. that they-
Right, during
Yeah.
the day, we're lucky if we see 1.
Yeah,
In
Tracy and-
most cases, it's 1. We have, Greenford, he works at Thompson. Chad.
Yeah.
It's either those 2, but.
Yeah, Tracy or Chad, they're most of, for the most part.
Yep, yep, so
During the day, they're all-
very,
they're all
very
on.
seldom do we see more than 2.
Yeah, and that's fine, I guess I just did the worst case scenario math real quick, you know. $5,400, I guess if you look at it, we spent money a lot worse ways than that.
Yeah.
Can it be billed and can there be something done, like, is there like a service fee that we could work with Gold Cross on adding that? I
That
mean,
was
who are
the
you working with
question,
at Gold
and
Cross?
when I talked to the representative from Gold Cross, I didn't have the executive director. I had just,
You
I
need
think
to-
I had the secretary,
Yeah,
where I need to have that strong conversation with somebody higher up, see what we can do to add on to them. I mean, because if we're seeing calls and call volume, you know, they're staging in Hortonville, but the way they explained it is, there's at times where every one of their ambulances is out.
Yeah,
Gold Cross, where they're, you know, where,
yeah.
so it's just the.
you know, and you're not gonna, well, I'm not gonna put that gauze pad on you yet until Gold Cross gets here. You know, they're using their own stuff and. you
Talk
know.
to Dave there, and when you do, ask if you can have a tour, and then also ask if you can watch their prediction software, which is pretty unique because it stores all this data. And so if you see an ambulance that's sitting like a Quick Trip or sitting somewhere here in the village or nearby, it's because their prediction software
Sure,
is
they're
indicating
staging.
that there's historical, something that happened in this area repeatedly on this date. But if you ask for a tour, I know Dave has always been really good with that, but I think he'd be the person to talk to, because I believe he's an RN, and
Okay.
he's one of the directors there.
Okay.
But
Gotcha, thank you.
I think it would be, it's something that we should probably put on the agenda to deal with, because it's on us. It's on the village to deal with the compensation for the EMS. And then it's on us to try to find a way to get compensated back for it. I don't think this is something that we should just kind of drag our feet on and say no. I mean, because they, from what I heard, they did ask about this last time too. And I don't know if it got conveyed back to the board.
Can that be
At the
built
last
into the
quarterly
This
fire?
is the first
That's
I've
not in
heard
the
of
fire
the
department
EMS,
budget
yeah.
No.
at all.
What's that?
No,
It's
that
not
was-
in the fire department
that was
budget. I
separate
always
budget.
assumed they kind of all work together.
Yeah, the EMS and the fire department have separate budgets.
Oh, okay.
We talked about a couple of years ago doing billing for service calls, because a lot of time, or for fire calls, because a lot of times your insurance will pick that up, but that was, nobody had the time to do the administration of the billing part of it. And the two representatives from the fire department that were here weren't real crazy about billing for, like, going for a CO2 alarm, and I completely understand that. But I know that was discussed. I think you could probably go back to some of the agendas and watch.
Essentially, what I told the fire department is in order for us to set up a schedule for potential billing in 2020, we need the 2019 data. We need run calls, frequencies. We didn't see that going into 2019. From what we heard at the last meeting here, at the half year, or at the quarterly, this was actually the quarterly meeting which took place in May. But, so we're hearing the frequency, so I'm hoping that we have more information that we can build it out. I think we're gonna end up doing something for the 2020 budget cycle is what it's gonna come down to. So we would put a line item in there. We're gonna have to do an estimated based on call frequency, what it is, and kind of approximate what we have to benchmark for that budget going into 2020. And then going on to them, they would administer it themselves. You
Does
know?
Allegheny County Dispatch keep the data on that, Chris? Well, if they're paging out Hortonville first responders, do they keep the data of that? Allegheny County Dispatch?
I don't know if they can or not with Spillman, I'm assuming that they do.
Because that would be data that would, to me, be easily accessible
Correct.
via dispatch.
Correct. And then as far as billing, you know, they talked about the administration side of it. Wouldn't even attempt to do that. Everything now is third party. They farm it out. You lose a percentage, but nobody wants to handle that. It's just easier to, especially when you're dealing with insurance companies. Not everybody's gonna pay, you're chasing down. It's no different than what we're doing with the court across the hall here. It's just an ongoing battle. You're better off letting a third party consultant handle it. That's what most municipalities do. So you're dealing with insurance companies and, you know,
Moving on with that, they, one of the other points was they needed a unified sign for the addresses for the complex behind Charlie's, because all their emergency vehicles are just, they get the call for the address and they just go whipping right by that driveway. So they wanna get a sign put out with a consolidated, you know, 2,500 to
whatever.
35, whatever that address
taken care of.
range is. You took care of it?
Update on that already. So
Okay.
they have a pole sign that's now on the road for Highway 15, so it's illuminated.
Oh,
It did stand out real well. It does now with their landscaping being completed, so it's in a grassy field right up front by the driveway. They also have markers on each of the buildings, and I did deliver maps the day after our meeting to the EMS and slid it under the door, so they have a map of the whole.
Yeah.
I made 10 copies and I put it in the paramedics' office at the next day. So they have them in all of their vehicles, so they can clearly identify the 4 units that are in the cottage's development.
that's right. And then they also brought up that there is nothing in the future plan to split up the Hortonville-Hortonia Fire Department districts agreement that we have. And then they went over the balances, fire budget's 23,000, reserve fund 32,000. 10,000 of that's planned for truck and pump maintenance already. EMS equipment is 10,000 in theirs, and EMS checking has 11,000. That was the total of the meeting.
And no major capital expenditures in the near future. So that was something that if we're gonna have a truck or something we need to buy, that we need to start, we can't have a $125,000 surprise like we got this year with the self-contained breathing apparatuses. So I said, please, 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 if you see something major coming down the pipeline, give us a year or two, if not 3 or 4, to prepare for. We can do possibly with some of the funds that we're being able to establish now, we can do a set-aside fund.
And
So
along
we
with
look at-
the Kerber Rose report, I guess what I was getting at with the depreciation is it's data that really helps when you're applying for a loan. And I look at,
Sure.
in the future, if we need a new truck or we need something, it's data that the financial institutions are looking for. Since we have that brand new, fresh inventory and appraisal, could we look
Absolutely.
into this? I think it's just something that, why not? We have the most recent data possible. Let's set ourselves up so that if we ever do need to do a loan or something for a large piece of equipment, we're already ahead of the game.
I think part of that is just the disconnect with the fire department, because they don't view as nobody views depreciation as something you do physically. They just run a checkbook.
Yeah.
And like I said, when their books came in, their checkbook was spot on. I reviewed it
Yeah.
before I handed it off to auditors, so part of that falls on Kerber Rose too, that they need to not only report that, but then they gotta put them on a practice to do that depreciation. So I think it's just a disconnect of
And I think it's
information.
something that it's just
Yeah.
being proactive, because we realize that eventually they're gonna need new trucks. Eventually they're gonna
Correct.
need new equipment.
Correct.
And it just helps us, I mean, we farmed and we had depreciation on all of our big equipment. You buy a $300,000 chopper, you start that on a depreciation schedule,
Sure.
and then you know where you're at on your balance sheet when you apply for loans.
However, Julie, they didn't ask for it either, because Gene
No.
and I had a list of things that were
Yeah,
asked
if they didn't
for.
ask for it, that's, I mean, I get it, but nobody knew to give that, but I just
Yeah,
look at,
yeah.
since we have that data, why we should expand on it.
Yeah, I mean,
And
it's
did they
literally,
not have the ages of stuff on there? Because
I
you would think
think
they'd
so.
have
it
to.
is,
to-
it's
It's
in
on
Hornville
there.
Share,
To be
it's in
able
the shared
to-
It's just
drive.
nobody
Yeah.
has initiated a depreciation schedule, and some
Right.
people think depreciation is a bad thing, but it's actually, it's data that financial institutions are
Mhm.
looking for.
I think our auditors dropped the bucket there.
Well, with all the personal property that they're eliminating too for deductions, if we can eliminate some of it, it's a tax
Hmm?
incentive for the village as well,
Mhm.
so,
Yeah.
yeah, once stuff is.
Sorry, I didn't mean to get,
No.
but
no,
that
no,
was a
that's-
perfect time just to bring up,
It's
I
so
just-
fresh.
Yeah.
I mean, most of that's right up
Yeah.
to date, so.
it's a no-brainer.
Yeah.
Okay.
And then one thing they did ask me to mention, the fire department is having an event this Saturday. And they said, they do not have a lot of people from the village that attend, and they would appreciate the support. So spread the word. That goes towards equipment and other things also. So just something to think about if you're not doing anything Saturday. Anything else for the fire department?
No, I think I do think that they're managing fairly well to, be prepared if there's a small, less than $20,000 expense. I think they're doing a pretty decent job of managing their funds and making sure that they don't have to come running to somebody else to ask for money right away. So that was the impression that I got. I think EMS is doing a pretty good job as well, but I definitely think we should add something to the upcoming agenda, so, and let them know that we're gonna do something about EMS.
And moving on to C is Gold Cross Ambulance Run and Report News. That is in our packets. The Civic Club is already completed. And then E would be the Senior Activities Committee.
Try to be quick. Autumn Fest is set for October 16th. We're having Jean Long Manteuffel as a speaker. She's going to talk about transitions, so moving a person to assisted living or a smaller place to live. Could be for ourselves or a family member. We're going to have it at St. Peter and Paul just because it was so crowded in here last year with the vendors and all the people that attended. So we've already got it cleared to have at St. Peter and Paul. They're not charging us anything to have it there. Have sign-up sheets out for activities. They've requested a field trip again to Mosquito Hill, so we've got that set up. There's a field trip we're planning on carpooling to Jerry Apps. He's speaking in Seymour. He's a Wisconsin author. The meal site is struggling. I won't go into it. They're not getting many people to come to the congregate meals for all kinds of.
Their average is down to one a day.
Yeah, and the home delivered is maxed out. They can only serve 10, and they're maxed out. So they don't have a manager right now, so they're filling in with subs. And then just an alert, we didn't have a senior activities in the budget. We didn't have a budget line for it. David and I talked about this, so we'll be having to have that as a budget line next year. I think we all thought it was there, and it wasn't.
Money was allocated, but was never put as a line
Wasn't
item.
actually there, so
So
then we had
it's
to pay it.
essentially sitting in one of our funds.
Yeah,
So when they
just
need it,
wanna
when they need it,
recognition.
we're gonna make a budget amendment and move it into that fund, so.
Any questions for Pat? Number 11 is comments and suggestions from citizens present, and we have none.
Can I didn't see library board on there, and we did meet last Tuesday.
This
Oh.
Tuesday.
This Tuesday, 2 days ago.
Okay.
Ally's doing an awesome job with the budget. The finance committee, which is 2 members of the board, are gonna be meeting with Ally in preparation for budgeting and annual report coming up, so just wanted to add that.
Are there any other comments? Then I will look for an adjournment.
I'll move to adjourn.
I'll second that.
All in favor?
Aye.